Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
Breaking news. In the last half hour, Bloomberg has learned that the EU will recommend a 9-month time limit on COVID vaccine validity for travel purposes. Meanwhile, Germany's COVID death toll passes 100,000 people as incoming Chancellor Olaf Scholz vows to tackle the latest surge. And taper talk, the latest Fed minutes show officials are open to removing policy support at a faster pace to rein in inflation, even before data showed price pressures accelerating.
Now let's take a look at what the futures are telling us. First of all, happy Thanksgiving to all of our American friends. It does mean that U.S. markets are shocked. Therefore, it means that actually we're seeing very thin volumes. However, the focus is on some of the futures. We did see a nice lift to Wall Street yesterday. Also, a little bit of stabilization when it comes to Chinese stocks. And if you look at inflation yesterday in the U.S., Tom, look, consumer demand was okay in the U.S., and that's also some positive news out there in the markets today.
Yeah, that combination of higher inflation at 5%, but as you say, resilient consumer in the US holding things up, and the market's looking past those hawkish minutes from the FOMC. They've already discussed prior, of course, to this latest data on inflation. This was early November, this meeting and these minutes. They already were discussing whether or not we're going to speed up the pace of taper. The markets, don't forget, pricing in a rate hike, the first one in June for 2022. Here how your markets are opening in Europe. Gains of 0.4% across the CAC 40. Germany is also up 0.3%. Spain gaining 0.2 or 18 points. And here in the UK, a slightly less optimistic first few minutes into the trading session, gains of 0.1%. Across the Eurozone then, looking past the concerns about these additional policy measures as the COVID-19 rates continue to cause concern. And of course, you have clarity on the political front from Germany. Reporting out of Bloomberg also suggesting that the UK will remain engaged with the EU in terms of the negotiations around Northern Ireland. Those talks are not yet breaking down. Let's see how things are playing out then across some of the various different assets. We've been looking at the US dollar at its strongest level, by the way, since about June of 2022. A little bit softer in today's session, but the trajectory for many for the greenback is higher from here as you start to price in 3, maybe 4 rates in the next 24 months out of the US. The futures, of course, up 0.3%. We know markets are closed for Thanksgiving Day in the US. The euro dollar is at 1.12, gaining 0.1% after a week of pressure on the single currency. The pound is in focus for us today again on the back of the Bloomberg reporting around the continued negotiations. A little bit of modest optimism when it comes to the question of Brexit and Northern Ireland. 133 on sterling, gaining 0.2%. Brent also in focus as we continue to assess the impact of the release of these reserves. $82 a barrel, down 0.1%.
Yeah, amongst the biggest gainers, Tom, if you look at the sectors, I see financial, health, staples, for example, raw materials. Now, there is a conversation that we need to have about oil. We heard from OPEC Plus saying that they now believe because of the release of the strategic reserves that we could see too much of a surplus. It really complicates the meeting that they have next week. So look out for any moves in materials, but also financials. If you look at what the Fed minutes told us yesterday, it does seem that they're looking forward to normalization a bit sooner maybe than the market was even expecting. That would be supportive of financials, one of the biggest gainers. And then healthcare, also look out for healthcare after we had that news that the EU would recommend a 9-month vaccine to be able, or a 9-month booster, a booster after 9 months you've had the second dose vaccine to be able to travel. Now let's get straight to the Bloomberg Business Flash with Laura Wright. Hi, Laura.
Hi, Francine. A report says English football is at risk of more financial chaos unless money filters down from the wealthy Premier League to lower-tier clubs. A fan-led government review is urging clubs to come up with a solution by the year-end or face the issue being taken over by an independent regulator. Teams have fallen into administration 62 times since the top league was founded back in 1992. Bloomberg has learned that Britain will hold off from suspending parts of the Brexit divorce deal relating to Northern Ireland for as long as talks with the EU remain constructive.
Traders, good morning. Hope you're doing well today. Order came through. I'm going to place an order to sell short Japanese yen. The price I'm looking to sell 115.375. Okay, let's place order 115.375. Okay, you have the strategy. All of you guys who use our strategy, please place an order and wait and see if we will get filled and what's going to happen next. With this, I will guide you through. Looks like it moved down. Hopefully, we'll get filled. Let me adjust the price 115.375. Okay, just right here. Let's see what's going to happen. Hopefully it's not far away from the our order, so hopefully it will get filled. As soon as it will get filled, I will let you know. I'll tell you what's going to happen next. Stay safe.
Well, we'll see what happens. We'll see what happens to Chase. Yes, we'll see what happens. There is that parent-toddler kind of dynamic that China sees itself, or at least the Communist Party does, when it comes to some of these situations and relationships. 20 billion exposure, of course, JP Morgan to the Chinese.
It's not bad. Now let's bring in Ven Ram from our Markets Live team to talk about all the things impacting the markets. Ven, there's quite a lot of going on when it comes to dollar strength. Like, what does it take for that to stop going higher?
Well, I think that with the Fed, with the markets pricing for the Fed to raise rates as soon as June, and everyone talking about faster taper, I think there is upside more than downside for the dollar, because the dollar is undervalued on my model, and I do expect it to go up by another 3-4%. If you look at the carry trade in the markets, last year carry trade was a complete disaster. This year it's come back, and it's come back with a vengeance. Last I looked, it was on track to advance at the fastest pace in 5 years or something like that. So I do think that there is more upside for the dollar, and I do think that that will come into sharper focus come 2022, what with the rate hikes and the real rate differentials coming into play.
So that call on a further 3 to 4% upside for the greenback, what time frame is that, and how dependent is that? What number of rate hikes are you factoring in to get to that 3 or 4% additional gain?
That's a great question. So we are talking about 3 to 4% gains over 1 year, over 2022, and I'm factoring in 2 rate hikes, and of course for the taper to be completed.
What are you looking at then in terms of, we have some jobs numbers out of the U.S. How does the U.S. dynamic with China play out? So the U.S., inflation's higher, the Fed could taper, but consumers are holding strong, and it also seems that China's stabilizing their situation.
Yeah, absolutely. And I do think that, in the case of the U.S., the economy is strong. It's firing on all cylinders. And I think that means that there's going to be faster taper. And as of China, it's about managing the currency. It's about managing the currency appreciation. And we have seen a lot of that. And we are seeing some noise from the PBOC saying that, look, we need to kind of hold back these gains. So I do think that the USD-CNY has upside from here as well.
Of course, the read across from the stronger dollar for EM is very pertinent indeed. We're seeing, of course, that volatility, the free fall for the Turkish lira. Do we look past the Turkish story now? Is that kind of done and dusted, or is there more volatility on the horizon for Turkish lira? And is there a read across for EM?
I think that there is definitely more volatility in store for Turkey, because if you look at it, I mean, it's like a flight that's lost its flight map, and it's flying, and investors are asking the question, is there anyone in the cockpit there? And as of now, we don't seem to have any answers. And if you see the volatility curve, it's completely inverted. That's an unusual occurrence, because options are obviously priced off the volatility curve, and you would think that considering the theta and the time decay involved, longer dated options should be priced more expensive, whereas shorter dated options in Turkey are more expensive now. And that shows that investors are jittery at the moment. And if you look at straddle pricing on USD TRY, they are factoring in a drop towards 1370 or thereabouts over the next 3 months. So it is, I wouldn't think that, we are past the crisis point here.
Yeah, particularly not when Erdogan clings on to this view that you need to further cut rates in the face of very high inflation. Venram, thank you very much indeed from our M Live team. Coming up, the latest Fed minutes show officials were open to removing policy support at a faster pace to rein in inflation. That's even before data show price pressures accelerating. We discuss with UK CIO at UBS, Caroline Simmons. That is next. This is Bloomberg.
Competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the US, New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The rhetoric you saw from Chairman Powell and Vice Chair Brainerd portends a new era here for the Fed. I think the question the Fed is now managing is not, do we have an overheating problem? Can we bet with Team Transitory? They know we do have an overheating problem and that they can't place their bet with Team Transitory. They've got a new problem, and it's a very complicated one, and I very much hope they'll be very thoughtful about it, because there are no easy answers. The new problem is, how do you land this economy softly?
Former U.S. Treasury Secretary Larry Summers, they're saying that the Fed is coming to terms with an overheating economy. Now, that's after the latest FOMC minutes showed officials open to removing policy support at a faster pace to keep inflation in check, even before data actually showed price pressures accelerating. Well, joining us now is Caroline Simmons, UK Chief Investment Officer at UBS. Caroline, thank you for being with us today. We also had that breaking news that the EU could recommend actually booster shots after 9 months for people to be able to travel. Does the rising number of infections, but also hospitalization in the UK, but across Europe, make you change your mind on where you want to be invested in, but also the growth path forward?
Yeah, it doesn't at the moment, but it's obviously a risk. I mean, we have a preference for Eurozone equities. And obviously, you know, if the COVID case counts continue to rise and lockdowns spread further, then there is a chance, obviously, that takes a little bit off growth, which then, you know, obviously takes a little bit off the earnings. So it's a risk for us. But, you know, with the plans to roll out the boosters faster, the likelihood is that the markets will probably look through it, as they have been doing increasingly with various lockdowns around the world.
Caroline, what is the reliance on continued support from the ECB on that European equity call?
Yeah, it's very unlikely, I would say, that the ECB will be tightening monetary policy anytime soon. That does provide a sort of extra kicker, if you like, to the Eurozone market, but it's not the sole driver. The majority of the call is based on the valuation and the earnings growth, which is, you know, significantly high, and it's obviously a very cyclical market. But it is also helpful that we think that there'll probably be a little bit more downside for the euro, particularly against the dollar, and that the ECB is going to be probably the last major developed central bank to do any tightening.
Caroline, does that make actually European equities more attractive or less attractive, given the valuations we're seeing?
More attractive, that we've got support still from the monetary side. What it tends to do is create rotations within the market. So, you know, as we've seen in the UK, when the market thought the Bank of England was going to raise in November, you see, you know, interest rate sensitive beneficiaries outperforming, and then obviously they didn't when the Bank of England didn't raise rates. So we'll see that sort of dynamic within the Eurozone. But no, in terms of them not raising rates and continuing with their stimulus packages, that is generally helpful for the valuations and for the dynamics of the Eurozone markets.
Caroline, you and the team of UBS have put out your latest report looking ahead to 2022. How do you see the year unfolding? I know you're looking at two halves, essentially. How do investors position for the way that the economic trajectory unfolds over 2022?
Okay, guys, it looks like was unlucky. We didn't have a chance to fill this order because it moved, as you can see, away from our order. We need to cancel it. Yep, we're trading on margin. So when we place an order, it means our account take money from the our cash account. Okay, and this order still halted, you can say like this, until it will be executed. So we will cancel it and we will find another trading opportunity to invest this money. So all of you guys who follow this trade and wanted to trade, please cancel it. I'll let you know when we're going to trade Japanese yen. Okay. In the meantime, stay with me. If you want to get the strategy, you can go to company.co.uk. For our clients, for our companies, or our customers who are using this strategy, please stay with me, and I'll let you know when we're going to trade other Forex pairs or Bitcoin. We're still keep an eye on Bitcoin. Hopefully today some changes happened and we will make profit by trading Bitcoin. Stay safe.
You know, are struggling. Unconventional yield would be things like private credit, where you can get sort of up to 600 basis point spreads over the base rates. You could also look at some synthetic options to generate some income, possibly dividend paying stocks if they're prepared to go into the dividend equity risk exposure. Those are the types of areas.
Okay, Caroline, thanks so much for joining us this Thursday morning. Caroline Simmons, CIO for the UK at UBS, with their outlook report for 2022, a year of two halves. Okay, up next, Germany passes 100,000 COVID-19 deaths as the latest wave of the pandemic puts hospitals in some hotspots under severe pressure. We'll get the latest. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Welcome back to the Open. 20 minutes into the European trading day. Gains across the European markets of 4.5%. The UK is near the bottom of the list along with Spain, but you're seeing solid gains in Italy, 0.6%. The CAC 40 up 0.4. Top of the list in terms of sectors, technology on the back of higher yields. At the bottom, you've got telecoms and energy. Okay, let's check in on some of the stocks then with Lizzie Burden. What are you looking at, Lizzie?
Well, we start with Rémy Cointreau, Tom, the French wine and spirits company. It's in the green so far this morning. That's after it raised its annual outlook after a stronger than expected jump in first half profits. It's boosted by demand for cognac in the US, Europe and China because hotels, bars and restaurants are reopened after pandemic restrictions have eased. But it also seems to have been a popular tipple at home. Sticking with France, the other stock we're watching is Orange, the French telecoms company. It's in the red after its CEO, Stéphane Richard, resigned after 11 years at the helm. That's because he was found guilty of aiding and abetting the misuse of public funds. That news late last night. We'll see how the stock settles into it today. And finally, Garanti, the Turkish lender. Citi's downgraded shares across the sector because of currency volatility following that slump in the Turkish lira. But keep an eye on Garanti because Bloomberg Intelligence says it has the capital, the liquidity buffers and the hedging policies to weather the storm, especially compared to the state-owned banks. In the red, but pretty flat so far.
Thank you so much, our Lizzie Burden there with some of the things that we're watching. I have to say, I haven't seen like a Cointreau. We used to, put it in crepes, like crepe flambé.
Ooh, that sounds good.
It's very nice.
With a bit of banana, and then you just, and it
So
flares up.
1970s,
Yeah.
perfect for Thanksgiving if you're having people
It's a
over.
good holiday tip from Fran.
It certainly is. Perfect at 8:22 in the morning. Now on to a pretty grim milestone, though. Germany has passed the threshold of 100,000 COVID deaths. Now, the latest wave of the pandemic is pushing new infections higher at a record pace and putting hospitals in some hotspots under severe pressure. Meanwhile, the EU will recommend a 9-month time limit for the validity of vaccinations for travel into the bloc. Well, joining us now, Sam Fazeli, Director of Research for Bloomberg Intelligence, EMEA. Sam, I could not be happier to speak to you because I have a lot of questions on, first of all, why we're seeing this huge resurgence. And if you go back to the 9-month travel that you need a booster, does it actually mean that, the vaccines work, but for a really limited amount of time?
Yeah, good morning, Francine, and thanks very much for having me back again. I think we have to think about this. First, I want to talk about the 9 months because it's going to be quite critical and interesting to see what the various countries actually do. Whatever the EU says, obviously national bodies have to make decisions of their own. But the question I have here is, what happens if a country is boosting only people above the age of 40? What happens if someone else is doing it above the age of 65? So I have to read the details, whether they've actually been able to give a time or an age limit on that. That has to be able to respect that. And that's going to be quite critical. If it's going to be 18 and above, then that's what the countries have to do if they want to have access to the European Union. So that's on the travel side. On the infection side, Francine, again, I keep saying that the vaccines were never designed or would never have been expected to be completely neutralizing against any infection from the virus.
Yeah, but Sam, just help us explain how we've got to a point where Germany, that was relatively successful in putting in place public health measures at the beginning of this, and then, of course, the rollout of the vaccine and the relatively low death rate there previously, how Germany has become front and center in this battle against the disease versus other countries outside of Europe. What is happening? What is the dynamic at play there?
Yeah, so I've been trying to get my head around this a little bit. I've seen some new data come out of Qatar that suggests that you get pretty good protection against hospitalizations having been infected up to about 9 months, at least. That's how far the study has gone. But so I thought, but let's have a look and see whether there's a correlation between the background levels of infections across the countries and their response and relative numbers of hospitalizations, etc. When you look at Germany, which of course we know they did really well, even if you add up their vaccinations to it, and assuming there's no overlap between infections and vaccinations, which of course there is, they are unfortunately at the very low end of the percentage of population potentially immune one way or another to the virus. So perhaps that's got something to do with it. I have to dig in a bit more, but I'm trying really to get my head around, is it about that? Is that about combination of vaccination and previous infections, which of course the UK has done really well because, well, I don't know if you could say that, but it's had a lot of infections.
Sam, I guess the critical thing for politicians is that it's easier to, manage to invite people that already have 2 doses of vaccine to get a booster than it is for the unvaccinated to get vaccinated with a first dose. What's the right strategy?
Yeah, I think the only way you can do this is by giving people incentives to get vaccinated. I think trying to create lockdowns for the unvaccinated or things like that is a bit tough. I think France perhaps had the best method in terms of if you want access to highly populated areas, entertainment areas, restaurants, you need to show your pass. I was at the restaurant here last night, and everybody who got into the restaurant had to have their pass checked, and it worked. Now, of course, the problem is that as a vaccinated person, I can still be infected. I can still be infectious. So that doesn't change that dynamic. What it does do is that it helps the country manage the pressure on its healthcare system, because assuming continued protection against hospitalization by vaccines.
Sam, thanks so much. Sam Fazeli there, Director of Research for Bloomberg Intelligence EMEA. Now up next, JP Morgan goes into damage control. As the chief executive, Jamie Dimon, says he regrets his comments about China's Communist Party. The details next. This is Bloomberg.
years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, here are your top stories. Breaking news in the last hour, Bloomberg has learned that the EU will recommend a 9-month time limit on COVID vaccine validity for travel purposes. Meanwhile, Germany's COVID death toll passes 100,000 people as incoming Chancellor Olaf Scholz vows to tackle the latest surge. And Taper Talk, the latest Fed minutes, also show officials are open to removing policy support at a faster pace to rein in inflation, even before data showed price pressures accelerating. So this is the picture for the markets, but of course it's very thin volumes because it's Thanksgiving time.
Yes, so of course equities in the US will not be trading today, but we had that data deluge out of the United States yesterday, and that is that pull and tug between continuing high prices and inflation remaining significant in terms of a 30-year high, highest level since the 1990s, in fact, and that strength of the American consumer. That resilience is still there on the back of these very strong household balance sheets, of course. Cash is there. How long before that burns down? Here across the Europe, taking a cue then for the gains that you saw towards the close in the US yesterday, looking through some of the concerns about the spread of COVID-19, the restrictions being put in place here. Gains of almost 0.5% across your benchmark. DAX is also up 0.3%. The CAC is higher by 0.4. Of course, weighing up these measures, or at least the announcements, the policy proposals from the EU around the vaccinations and the implications for travel. The FTSE 100 is almost flat, up 0.1%. We can move it on and have a look at how things are playing out sector by sector. A flattening of the yield curve and a stronger dollar. Higher at the front end, lower at the back end. The technology sector is gaining on the back of that, 1%. Utilities also up 1%. At the bottom of the list, just modestly, telecoms down by 0.5%. Energy is also feeling a little bit of pressure, down 0.2%. That is the shape of play 30 minutes into the trading session here.
Tom, we're also just getting some breaking news out of the Riksbank. This is the Swedish central bank, of course, saying that it will leave the key rate unchanged at 0. So something we need to watch out for, because they did say that they will stay at this kind of level for a long time. We'll have to see whether anything changes in terms of guidance. The Riksbank saying that they will be raised in the latter part of 2024. Now, JP Morgan's Jamie Dimon says he regrets his joke that his bank is likely to outlast China's Communist Party. In a statement, Dimon said he was trying to emphasize the strength and longevity of the company. Now, it's the latest in a string of provocative remarks that he's been forced to walk back from. Let's bring in Bloomberg's Jonas Bergman in Hong Kong. Jonas, how problematic is this? And actually, the fact that China says they've noted his apology, does it mean that they've taken it badly?
I mean, I think clearly, he stepped back and, backpedaled pretty quickly. It was a roller coaster ride. We saw some, right before China has now, said that they noticed his sincere reflection, and they said they believe this is the right attitude by Diamond to walk back this. But clearly it was some other people overnight, including the influential editor of the Communist Party tabloid Global Times, who himself quipped that China would last longer than the U.S. And we had another influential voice in China questioned whether J.P. Morgan really wanted to keep its banking licenses or investment banking licenses in China. So I think there was a lot of pressure overnight, and as we've seen, that he walked back those comments pretty quickly.
Good old Hu Xijin of the Global Times. Jonas, where are you looking at in terms of the markers for this that could tell us what the response will be? We often look at licensing applications and whether or not they get delayed, dragged out, or cancelled. Is that something that we can focus on to see what the material impact could be for JP Morgan on the ground in China?
Yeah, well, I mean, luckily for JP Morgan, I would say, I mean, it was the first, to win its securities firm license earlier this year, so it fully owns that. And it also fully owns its futures operations in China. Now, it is seeking full ownership of an asset management, a fund management business. So we'll see about how that plays out. But these processes are, notoriously opaque. So it's very hard to know whether it's just being delayed by bureaucracy or whether there's something actual behind any delays. They usually take, months and almost a year to get through. What we could maybe start looking at is whether, they're not doing a lot of business in China now in terms of deals because all these banks are really starting out. But we could start looking at whether, maybe they're not on some bond deals or they're, getting left behind as others go ahead. So it will be interesting to see whether he's cleared the plate, so to speak, and everything is good, or whether this will keep lingering for the bank.
Jonas, thank you so much. Jonas Bergman there, of course, on the very latest on JP Morgan and China. Now let's turn to one of our other top interviews. Kai-Fu Lee is a pioneer in the field of AI. In the 1980s, he developed a computer program that actually beat the best human player at the strategy game, Othello. It was a forerunner of the pivotal moment in artificial intelligence when IBM's Deep Blue beat chess grandmaster Garry Kasparov. Now, Lee has had also a leading career working for U.S. tech companies in China. He was president of Google China and now runs a VC firm focused on Chinese tech firms. Lee joined us for a Leaders with Laqua episode to discuss the geopolitics of artificial intelligence, as well as the opportunities and the risks that this rapidly developing technology presents.
I think both U.S. and China have tremendous strengths in AI, different. The commercial companies in the commercial areas, I think U.S. tends to be much stronger in enterprise applications, like C3 AI and Palantir and companies like that. And China is now showing a lot of progress in robotics, especially for manufacturing and warehouses. And the two countries are both developing great companies in autonomous vehicles, healthcare, and internet. But largely, those companies don't compete against each other due to the current geopolitical tendencies. So I think both countries are, we're seeing tremendous AI companies leveraging the strengths of each country. In the case of US, enterprise software. In the case of China, manufacturing. So I hope AI will end up making companies in both countries winners.
In China, are Chinese companies looking to, have more of an influence domestically rather than internationally, or will that change over time?
I think right now, most of the Chinese AI companies are focused domestically. And should they go abroad, they're more likely to go to countries that have a strong commercial relationship with China and no limitations on technologies. So perhaps the Southeast Asia, Middle East, Africa would be more likely, maybe South America, whereas I think US will tend to have more influence on the traditional areas like English-speaking countries and Europe and Japan. So I think each country will naturally go to the regions where it has some advantage or it has fewer limitations.
Kai-Fu, what does the world look like in 40 years? So, is it going to be like the Terminator, and you get asked that very often at dinner parties, or what's your vision on where we'll end up?
I think it's two very different possible outcomes. As you know, I wrote the book AI 2041. We try to look 20 years out. You want me to look 40 years out. I do think we have two possible outcomes. There's not a lot of scenarios in the middle. I think either we get our act together and figure out how countries can collaborate and finally realize there are many issues we can work together on, like climate and healthcare, and that positive exemplars lead the world and technology problems are overcome, then we really reach a world of plenitude where all these technologies will basically eradicate poverty and hunger, and also positive uses will make us live healthier. That's one outcome. The other is that technologies can be misused by people. I don't think technologies will become evil itself and like a Terminator or a dystopia like that, but I do think they provide very powerful weapon to bad people. And terrorists, for example, or countries that choose to use them in a very damaging way to the rest of the world, because I think technology amplifies people's capabilities, and using, take autonomous weapons as an example, it's something that could wipe out lots of people.
Innovation Ventures Chief Executive there, Kai Fu Lee, and you can watch that full conversation on Leaders with Lacqua, available on Bloomberg.com or here on Bloomberg TV. It's at 9:30 p.m. UK time this evening if you're watching in Europe.
Okay, we have a rate rise from Hungary, raising its one-week deposit rate by 40 basis points to 2.9%. You're seeing an upside of about 0.5% for the forint versus the euro, 366 from 368, 369. So again, in terms of the forint rising on the back of Hungary raising its one-week rate by 40 basis points, 2.9%. Okay, let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Germany's new government is promising to slash greenhouse gas emissions with a faster coal exit, more renewables, and a new carbon price floor. After nearly 2 months of negotiations, the centre-left Social Democrats sealed a coalition agreement with the Greens and the pro-business Free Democrats. The deal will see Olaf Scholz replace Angela Merkel as Germany's chancellor within weeks. Sweden's first female Prime Minister, Magdalena Andersson, has been forced to resign just hours after her historical appointment. The resignation was triggered after a junior coalition partner left her government over the loss of next year's budget vote. The former finance minister says she's still ready to lead a one-party cabinet and will now face a new vote. Germany has passed the threshold of 100,000 COVID-19 deaths, with the latest wave of the pandemic pushing new infections higher at a record pace. German authorities are considering vaccine mandates for people who work with vulnerable age groups. Denmark, meanwhile, is seeking to make masks mandatory on public transport. Bloomberg has learned that Britain will hold off from suspending parts of the Brexit divorce deal relating to Northern Ireland for as long as talks with the EU remain constructive. The UK wants a significant overhaul of the protocol, while the EU is only offering concessions within the framework of the existing deal. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Thank you so much, Laura. Now, coming up, we'll have plenty more, of course, on the markets. We also speak with the chief executive of Italian utility company Enel on its green energy transition. We'll be speaking to Francesco Starace. Don't miss that conversation. It's up next, and this is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the Open, everyone. 45 minutes into the European trading den. You can see we're seeing a little bit of a lift-off when it comes to European equities. A reminder, of course, it is Thanksgiving, so we're not seeing a huge volume. So it's going to be a quieter day, but we could see some of the moves exacerbated. Now, the Italian energy company Enel has brought forward its net zero emissions commitment by 10 years from 2050 to 2040. It also plans to invest 170 billion euros this decade to accelerate its shift to greener energy sources. It's also considering listing its electric car unit. Well, Enel's chief executive says this year is a pivotal one for the company. And we're very pleased to be joined by the Enel chief executive, Francesco Starace. Francesco, first of all, we're delighted to have you on because you're the real deal. You took on, of course, some of the transition, some of the renewables very early on and really pushed it through. When you look at the renewable landscape where Enel wants to grow, where do you see the most value? Is it hydrogen? Is it solar? Is there something else that we should be looking out for?
I think in the next 10 years, so we're looking at this decade, there is going to be a super focus on solar and wind, being onshore or offshore. Hydrogen will probably pick up at the end of this decade on a material scale. For the beginning of the decade, there will be some efforts on hydrogen just to prove whether it becomes, I'm talking about green hydrogen, obviously, whether it can become a competitive hydrogen production methodology. Today, it is not. So first part of the decade, business as usual, long on solar and wind. And end of the decade, if hydrogen makes it, then hydrogen becomes important. If not, it's okay.
So you're putting aside 170 billion euros as part of this transition within the business on this focus on renewables. Do you have a sense of how the input costs, the inflation that we're seeing, will impact the investments around renewables and the expected return on those investments?
I think we see this already. I mean, there is attention on raw materials, there's attention on congestion on ports, the logistics are tangled. So there is clearly an inflationary trend. This is not the first time in this business. We had in the solar business in particular twice this phenomenon in the past. Typically it is resolved in about 12 months. I think this will probably drag until mid-22, but after that, we don't expect any more tensions. And technology actually is working the other way around. So it's pushing down costs and making this technologies more and more efficient. And we see this trend to continue probably in the next 10 years again. So it's a blip. It's not the reversing of a trend. What does this mean is probably there is going to be people suffering in this predicament for the next 12 months, but large companies like us would just push it.
Francesco, give us a sense of actually in your expansion plan, how much of that is organic and how much is it actually you going out there and doing M&A, and how much do you have to spend on that?
This money that we set aside is all organic growth. So it's basically networks, roughly 45%, and the other 45% renewables, and the rest is a little bit on other technologies. So most of that is organic. We will have some M&A network, particularly acquisitions during the period, but we're talking about opportunistic deals. When I say mid-size, I mean in the range of the 5 to 10 billions, no more.
What kind of pricing have you assumed in terms of underpinning this investment? What kind of pricing levels are you looking at to kind of support that 170 billion euro shift?
When you look at pricing for renewables, you have today very low figures around the world. We're talking about levelized cost of energy coming from these plants that can reach the 35, 25, depending on the intensity of resource, euros per megawatt hour. So it's extremely competitive. And that is underpinning this growth. This is today a growth that displaces existing thermal generation purely based on economic terms. That is not going to change. It's actually going to get lower and lower. And that is the strength of this revolution. It is going to displace thermal generation, and that's it. What we have not talked about enough, and I think it's going to become a clear theme, is that batteries will play a great role in integrating this thermal generation substitution with renewables, so that it is going to be a reliable substitution and not just a risky one. We have about 9,000 megawatts of batteries in this plan, which is a huge number.
Give us a sense, Francesco, what natural gas, actually what role it has to play in either the transition or some of the things that you're looking at. We can't, I mean, you know, what will our usage of natural gas look like in 3 years?
I think natural gas will slowly be displaced from electricity generation because it is not competitive anymore and it is extremely volatile and therefore poses a risk to the risk profile of companies that get into this business. It will remain important in all industrial processes that require high temperature processes. So hundreds of degrees of temperatures or thousands of degrees of temperatures. In that case, it will be difficult to displace by electricity. It will remain important for chemical processes where you need molecules of special materials to do your chemical reactions. But for power generation, it will be marginalized more and more. I don't think that by 2040 you will see much gas into the electricity business, as you see today for oil. I mean, there was a time where oil was used for electricity production. Now it's no more there. So it will be displaced gradually.
Okay, NL CEO Francesco Starace, thank you so much for joining us this morning and outlining how you plan to invest that 170 billion euros as part of this transition to build out the renewables within the business in NL. Okay, up next, American households are about to eat their costliest Thanksgiving meal ever, if they can even find the turkey. We'll look at some of the factors driving up dinner prices. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 54 minutes into the European trading day. Happy Thanksgiving. Little volumes. Stocks are up. Now, there's a lot for Americans to be thankful for this Thanksgiving, but the impact of rising inflation on their turkey dinner may dampen the mood. Now, for more, we're joined by Bloomberg's Ed Ludlow. Ed, so good to see you to talk also about some of these inflationary turkey prices.
Right.
What are you looking at?
Yeah, I'm looking at how Turkey fits into the global inflation story, right? It's so closely linked to damaged supply chains. The frank reality is that Americans can expect their Thanksgiving dinner to cost 14% more this year, but it really is the turkey that's at the heart of that, ranging in a price increase of 20 to 24%. And it's all of the things we've been discussing for months. A labor shortage is hampering processing. I heard you talking to the Enel CEO, right, about natural gas. You know, the natural gas crunch really hit the fertilizer industry, which has damaged agriculture, both in Europe and the United States, elevating prices. And you see that on the dinner table, right? Cranberries. I was speaking to the Ocean Spray CEO a couple of days ago, which is interesting because he was saying they're also struggling on the commodity side for the cans. He's basically telling everyone, go out and buy fresh cranberries this year. You might not find the cranberries on the shelf. So it's very broad-based disruption. What's concerning is that inflation in food prices is very elevated in the US, less so in Europe, but in Europe, those supply chain issues are still getting worse.
Okay, Bloomberg's Ed Ludlow on the increasing price of your dinner turkey at Thanksgiving, and the read across, of course, to the European space. When we look ahead to Christmas, people gearing up for that. Already the supermarkets saying, get your turkey orders in now.
Yeah, you know, and it's difficult to look at the supply chains. And actually, if the UK, because of the drivers, is also an added layer of uncertainty. Well, that's it for the European market open. Of course, a lot of the focus on some of these inflationary food prices. We also had the UN coming up with that a little bit earlier on this week.
Yeah, plenty more coming up. Surveillance Early Edition is up next. Happy Thanksgiving to all of our American friends. This is Bloomberg.
An extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that part 2 of the president's government's agenda, what I like to call the big deal. But part two of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Question the Fed is now managing is not, do we have an overheating problem? The new problem is, how do you land this economy softly?
We really can't control the stock price. What we can control is our execution.
Day after day, new records are being set in terms of the number of infections. The situation is serious.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The EU is to endorse a 9-month limit on COVID vaccine validity for travel. The move is seen as strengthening the case for boosters. The incoming Chancellor Olaf Scholz sets out to steer Germany through the resurgent pandemic. COVID-related deaths in Europe's largest economy hit 100,000. And Taper Talk, the latest Fed minutes actually show officials are open to removing policy support at a faster pace to rein in inflation. Now, first thing is first, let's check in on the markets. Remember, it's Thanksgiving. Happy Thanksgiving to our American friends. It means that we're seeing volumes thinner than usual. Still, we're seeing a bit of support when it comes to the European stock 600, also the S&P futures. This is on the back of signs that there's a solid recovery in the U.S., that we do have more elevated inflation maybe than expected. That will spur Fed policy adjustment, but at the same time, it's not actually hitting any of the consumer stocks. We also had some pretty encouraging news out of China on how they're trying to stabilize the economy. One thing we need to look at is the U.S. dollar. Really strengthening in the last couple of days. Currently, you can see we picked the Bloomberg U.S. dollar index at 118.8, and then euro dollar 112.26. Remember, at 12:30 UK time, we also have the ECB minutes. If you look at the breakdown, country on country, now we're seeing a couple of stocks that we're watching out for. One of them is Orange, after Stéphane Richard, the chief executive, 11 years in charge, had to step down. The CAC 40, you can see, getting some 0.2%, similar gains across the DAX, the FTSE, and here in the UK. And then we know also that the European Union is putting this proposal about what to do with people traveling. They need a booster after 9 months. Now, Europe, once again, the epicenter of the pandemic. Germany has passed 100,000 coronavirus deaths, with new infections still rising in hospitals in some cities becoming overwhelmed. Countries have been adding new measures to face its fourth wave on the continent. Germany is considering vaccine mandates, and we've learned that the EU is set to recommend a 9-month limit on COVID vaccine validity for travel. Let's get more now with our Bloomberg Intelligence senior pharmaceutical analyst, Sam Fazeli. Sam, the situation seems pretty bad in Europe. Do we know why it's gotten worse and almost exponentially?
Well, hi, Francine, and thanks for having me on this morning. Obviously, we are coming into the winter, and that is the time of respiratory infections. That was a lot of things that people had. That's exactly what people had expected to a degree. And then what I'm trying to figure out is why there's such a disparity between the different countries. Belgium having one of the highest case rises, Holland, and then of course you've got Austria, which is off the scale in terms of per capita case counts. And that, a lot of that, I think, goes back to the measures that the countries have been taking along the way in terms of masking and current rules. And And those are things that really, really make a difference to the risk of infection. Keeping people apart is important.
Yeah, so Sam, first of all, how much stricter will measures need to get to fight this wave of the virus? And it seems that the UK was actually much more lax in terms of not having a COVID vaccine passport, no mask wearing, actually. But do the cases match, the laxity of the rules?
Well, to a degree they do, Francine. When you look at the across the continent, when you have countries such as France, I mean, it's a very complex interplay between a whole lot of different variables. But the key variable is if you've managed to keep people distant from each other or having at least wearing masks so that they're not breathing on each other, that certainly does seem to help. And when you look at case counts in France, although they're going up too, and compare them to, for instance, Portugal, where everybody, I think, observes the mask wearing, etc., and then go to other countries, case counts, I think, do fit with the laxity of rules.
Sam, we're just getting some breaking news that, the French health authority recommending COVID booster for all adults. This is on the back of the EU recommending, of course, this 9-month limit for the vaccine validity. Do we have enough vaccines for this to go around? Or again, does it take actually, important vaccines away from emerging countries?
Yeah, I mean, that unfortunate problem will continue to be an issue. But even if you give a booster shot to the entirety of the European Union, you're talking 400 million doses. This is one shot here. And in 2022, which is where a lot of this, I think, will be happening, we're expecting something like 8 billion doses from just the mRNA vaccine makers. And then you've got 4 billion from Serum Institute for the AstraZeneca vaccine and 2 billion from Astra directly. So we will be awash in doses. The point is trying to get them to the countries that need them most is critical. And that's where I think the challenge of 2022 will be. Not supply, but more actually getting them and distributing them and getting to people's arms.
Sam, very quickly, I mean, I guess the other concern is that if you have one second dose, then it's very likely that you get a booster shot if it's offered. How do you entice people that just don't want to be vaccinated?
That's a problem that we've had all the way along here. I mean, if they're not, and I know somebody like that, if they're not interested in the vaccine at all, they're prepared to give up the going to a restaurant or a theater or a bar, etc. Unfortunately, all those decisions do eventually impact others because those people are at risk. And when infection levels are high and vaccinated people can be infected and transmit, then they're at risk. They fill up the hospitals and impacts the rest of the healthcare system. And that's really not fair.
Thank you so much, Sam Fazeli there, Bloomberg Intelligence Senior Pharmaceutical Analyst. Now, joining us is HSBC Global Chief Economist Janet Henry to talk about, of course, the economy and to talk about some of the resurgent cases. Janet, thank you for joining us. If you look at monetary policy, but also just the growth trajectory of a lot of these European countries, are we going to see lower growth because of further lockdowns or restrictions? Or, that could change the trajectory, or will it just be blips?
Well, it's certainly going to be uneven, and it's going to still be a little bit volatile. And it's going to vary a lot within countries. I mean, it's interesting just looking at the big four. Actually, if you look at France, Italy and Spain, the momentum is still quite strong. But Germany is obviously one of the countries that could potentially be on the verge of more restrictions coming through. And Germany, the data have been disappointing. Unusually for Germany, not on the consumer side, but because of the supply disruptions on the industrial side. So without a doubt, it is not good for growth. Anything that interrupts the reopening and that restricts activity is, at least in the near term, going to be damaging for growth prospects.
Yeah, could we see, Janet, that pushing inflation higher actually because of supply chain constraints while at the same time hurting growth? So does that accentuate the stagflation concerns?
Well, yes, they're certainly going to be moving in opposite directions, but it is impossible to forecast the precise timing because we're also seeing this play out in China. You may recall that we had the October China data, retail sales picked up, but actually the resurgence in cases in China, but from a tiny level compared to what's happening in Europe, actually meant more restrictions at the end of the month. Now in November, we'll probably see some softening of the consumer spending side. And I think it will be the same. We'll see that in Europe as these restrictions get eased and then lifted at the same time as prices are not coming down. These supply disruptions, yes, at the margins, chip shortages for the auto sector are easing. We finally saw US production of cars pick up in the last month, but in Germany it is extraordinary. The divergence between orders and production, it's quite clear that those disruptions are still in place at a time when inflation is rising with slowing activity.
Janet, what are you expecting from the new government actually in Germany, and what's the potential there for who takes over the ECB and what that means actually, who takes over the Bundesbank and what that means for ECB?
Well, yeah, I think, you know, when we think about the ECB, we are used to, since the inception of the ECB, of the head of the Bundesbank speaking with that very kind of traditional Bundesbank mindset. So it would be unusual if the head of the Bundesbank was not more concerned about the possible upside risks to inflation than the broader board. But remember, typically we have two German people on the ECB, and currently that is the case because we also have Schneibel on the executive board, and that matters too. So I wouldn't say that the head of the Bundesbank matters in particular. It's not going to completely change the direction of the ECB. That's still very much led by Lagarde and by the board of the ECB, and that will set the direction for policy. But we would need to get used to, yeah, absolutely, the Bundesbank voice still being heard.
Janet, thanks so much. Janet Henry there from HSBC stays with us, and we'll talk a lot more about the Fed because the latest Fed minutes show officials were open to removing policy supports at a faster pace to rein in inflation. Up next, we continue our conversation with HSBC's Janet Henry. You can send in your questions on IB Plus TV Go. This is Bloomberg.
Common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
You saw from Chairman Powell and Vice Chair Brainerd portends a new era here for the Fed. I think the question the Fed is now managing is not, do we have an overheating problem? Can we bet with Team Transitory? They know we do have an overheating problem and that they can't place their bet with Team Transitory. They've got a new problem, and it's a very complicated one, and I very much hope they'll be very thoughtful about it, because there are no easy answers. The new problem is, how do you land this economy softly?
That was the former U.S. Treasury Secretary Larry Summers saying that the Fed is coming to terms with an overheating economy, and that's after the latest FOMC minutes showed officials open to removing policy support at a faster pace to keep inflation in check, even before data showed price pressures accelerating. Well, we're back with Janet Henry, Global Chief Economist at HSBC. Janet, when you look at what we heard from the Fed minutes yesterday and how inflation is taking hold, when are you expecting the Fed to move?
Well, I think the first attention is what happens regarding the tapering. Obviously, at the November meeting, they set out an initial path for tapering for November and December that will put them on track to halt the asset purchases in the middle of the year, in fact. And in fact, that's why the market's fully priced for a rate rise in June, so that asset purchases would end just before that rate rise would actually happen. But obviously, it's not just the minutes, it's the comments that we've had from all of the other Fed presidents. And we're used to some divergence from the kind of regional Fed presidents. Usually the board speaks with one voice, but we've had doves like Daly saying she's open to it, and even speeches from Clarida. So I think what we heard from the minutes was a confirmation of that actually a number of participants are open to accelerating the asset purchases if the data continue to firm. And it's not just about employment, it's not just about inflation, it is about employment too. You know, the data are quite firm, and inflation has been rising and broadening.
So, Janet, talk to me a little bit about sequencing, because that will probably be the toughest job of the Fed right now, to make sure that the markets understand it. How do you see this exactly playing out?
Well, I think, you know, there is obviously a growing likelihood that the Fed does accelerate the purchases, but with no pre-commitment. I mean, I'm sure the market would react because they think it's unlikely the Fed will continue asset purchases at the same time as raising rates. So if they were to accelerate the purchases, and that could well happen at the December meeting, particularly if we get another very firm payrolls, that could halt the asset purchases by the end of by the middle of March, and that would give them the option, potentially, of raising rates even as soon as the second quarter. But I don't think they will commit at that point, because as Larry Summers said in your opening sequence, it's a very complicated situation. And even Jay Powell in his speech has been, yes, their most likely scenario is that inflation comes down, but they have no confidence on the timing or the likelihood. So it's the end of tapering, then they wait to see if there's further progress, or indeed whether they have inflation has to dominate their desire to make even further progress regarding their employment goal before raising rates.
Janet, talk to me. Yeah, Janet, so talk to me a little bit about, you know, dollar. Do you have dollar strengthening from here, and what needs to happen for it to, you know, go back down a bit?
We do. It's not an aggressive view on the dollar. Our currency strategists have a forecast on euro dollar of 110, but that's by the end of 2022, on the assumption that a degree of Fed rate rises are already priced in. But we do think that the Fed will be raising rates, and we don't think the ECB will. And obviously on the ECB, the markets still have a likelihood that the ECB starts tightening by the end of 2022, and we don't share that view. We still think they'll be making asset purchases at that point. What could cause it to change course? I think probably a policy of benign neglect, which I don't think the Fed has. If the markets took the view that actually that the Fed was way behind the curve and it was going to sit back and do nothing at any point, even as inflation continues to rise, then it could be potentially that the currency decides to weaken. But we think that's unlikely. We've still got a firming dollar, even if it's not an aggressive move.
Thank you so much, Janet Henry, the Global Chief Economist at HSBC, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The EU is recommending a 9-month time limit for the validity of COVID-19 vaccinations for travel into the 27-nation bloc. It is also calling for member countries to reopen from January the 10th to all those who have used vaccines approved by the WHO. EU governments are pushing for the bloc to smooth out differences in rules to help safeguard the ability to travel. Now, Germany's new government is promising to slash greenhouse gas emissions with a faster coal exit, more renewables and a new carbon price floor. After nearly 2 months of negotiations, the centre-left Social Democrats sealed a coalition agreement with the Greens and pro-business Free Democrats. The deal will see Olaf Scholz replace Angela Merkel as Germany's chancellor. That will happen within weeks. And Sweden's first female Prime Minister, Magdalena Andersson, has been forced to resign just hours after her historic appointment. The resignation was triggered after a junior coalition partner left her government over the loss of next year's budget vote. The former finance minister says she's still ready to lead the one-party cabinet and will now face a new vote. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Up next, American households are about to eat their costliest Thanksgiving meal ever, if they can even find the turkey. We look at some of the factors driving up dinner prices. This is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the Q3 was the quarter that was most affected.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's Thanksgiving, but the impact of rising inflation on America's turkey dinner might just dampen the mood. Now, for more, we're joined by Bloomberg's Ed Ludlow. Ed, good morning to you. Talk us through the rising price of a Thanksgiving meal.
Yeah, the inflation discussion is just at the heart of financial markets right now. And while it might be slightly lighthearted and tongue-in-cheek, at Thanksgiving, the cost is 14% higher for the whole meal, right, year on year. And really at the heart of that is this, the turkey. And it's a great case study because it's an industry that has faced labor shortages for processing. You see retailers, the biggest retailers in the US, dipping into frozen inventories, which are now at lows, driving up prices. And even though consumer demand is robust, this idea of food inflation, food price inflation, is worrying to central banks around the world, right? This is something that is a greater contributor to CPI than other things, including energy at some point. So it is a concern.
Ed, if you bring it closer to home, how
Right.
would the supply chain actually impact Europe as well?
Yeah, Bloomberg Economics has fantastic data sets tracking supply chain constraints. And in the US, those are easing. What's worrying is that in Europe, we're kind of still on a bad trajectory. This is the Euro area supply constraint indicator that Bloomberg Economics puts together. A positive number indicates a deficit when it comes to supply. What does that mean for inflation, the outlook for inflation? I think we have a terminal chart which basically shows food inflation in the US versus food inflation in Europe. You know, when we got those Fed minutes, which came before the October CPI print, we know that the Fed were already concerned about the trajectory of inflation, particularly in the area of food. Now, food inflation in Europe, the blue bars, isn't kind of at the same level as the US, but we know that their supply chain constraints are going in the wrong direction. So you'd look to that number and wonder if it might start to etch higher as well.
Ed, thanks so much. Ed Ludlow there with some great charts and, of course, looking at some of these pricing pressures and food inflation. Now, coming up, we talk about Turkey. Not that kind, the other kind. The country, the lira's wild swings. We'll get into key drivers in emerging markets with Magdalena Polen from PGIM and Phoenix Callan from Societe Generale. Remember, when we look at some of the trading dynamics today, of course, it's very thin volumes because it is Thanksgiving in the U.S., but globally, stocks are advancing. If you look at what traders are looking at, there seems to be a belief that there's a solid recovery in the U.S., and that outweighs jitters over inflation and a faster tapering of Federal Reserve stimulus. This is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think we'll end up being on the right side of history as well.
From New York City.
Here in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. So recap the headlines.
You do not want to miss this
How are
story.
you thinking about those dynamics?
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Well, the EU is to endorse a 9-month limit on COVID vaccine validity for travel. The move is seen as strengthening the case for boosters. Incoming Chancellor Olaf Scholz sets out to steer Germany through the resurgent pandemic. COVID-related deaths in Europe's largest economy actually hit 100,000. And JP Morgan in damage control mode. The chief executive, Jamie Dimon, says he regrets his comments about China's Communist Party. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, let's check in on the markets to tell you what's going on. There is a belief in the markets, at least for today, could change very quickly as it usually does, but that the economy is getting a little bit stronger. Now, stocks are rising on the U.S. growth outlook, and it does seem to be outweighing some of the mood of cautiousness that we've seen over the last couple of weeks. Certainly, we had jitters over inflation and a faster tapering of Federal Reserve stimulus, but the growth trajectory for the moment is taking a hold. Now, while inflation concerns are deepening, traders didn't seem to be in any mood to let go of opportunities to benefit from the U.S. recovery. There was a rising bet not only for a quick taper or quicker taper, but also an earlier liftoff of interest rates. A reminder, it is Thanksgiving, so a lot of U.S. markets are closed, and of course, overall volume is thin. Now let's focus in on the key drivers in emerging markets, and we've seen massive volatility in the lira over the last couple of days. President Erdogan's push for lower interest rates have triggered some wild swings in the Turkish currency. Well, joining us now for more and what this could mean across the EM space is PGIM Fixed Income's principal economist, Magdalena Polen, and Societe Generale's global head of emerging markets research, Phoenix Callan. So thank you both for joining us. Magdalena, let me kick off with you. When you look at some of the dollar dynamics and dollar strength that we could see from here, what does it mean for emerging markets, in general, and also the sequencing of Fed tapering?
Well, it's definitely a challenging time for emerging markets given the Fed tapering and the growing differentiation between the EMs. As you can see, a country like Turkey with persistent vulnerabilities and lacking of credibility of macro policies is definitely affecting the reaction of that market. And if you look at countries with stronger fundamental, better policies, that is definitely helping with that differentiation. I don't think that has impact on the Fed itself. Yeah. The Fed doesn't really look at the emerging markets as much. It does definitely look at the global economy as such, but the detrimental effects of its tapering doesn't really have impact on its own decisions.
What about you, Phoenix? I mean, is there a worry that stronger dollar could actually, hurt some of the emerging market currencies?
Yes, definitely. A stronger dollar as well as rising U.S. rates. I think those are some of the key challenges for EM, alongside things like the fiscal burdens that are elevated as well, on top of the inflation concerns that we see persisting through the first half of next year. And we've got shrinking real growth differentials between EM and developed markets. And that all leads to diminished capital flows. So we think these forces are likely to exert downward pressure on currencies over the next half year, and upward pressure on EM rates and bond yields.
Yeah, Phoenix, I was speaking actually to our wonderful reporter in Hong Kong, Tanya Chen, who was saying, one of the things that we need to try and figure out is whether stability of yuan, or certainly some of the policies being put in China, could be a counterbalance to what we see from the Fed. So how do you see that playing out?
Yeah, so for us, China is going to act as a key anchor. It's going to contribute to global growth deceleration because the Chinese policymakers have shown that they are much more tolerant of slower growth. in exchange for more sustainability, for quality of growth. They've got various reform initiatives, and all of that is embodied in the common prosperity theme. And I think that is going to act toward kind of a targeted regime of, targeted fiscal easing measures. They'll be quite sparse and parsimonious with respect to widespread PBOC easing. So we might see limited easing, and that will come over the course of next year. But we think overall that means that China is going to decelerate. They're okay with that, and that's going to anchor medium-term global inflation as well and keep the currency trajectory relatively stable.
Magdalena, what's your take? And we'll get to Turkey in a second. But overall, could China actually be a stabilizing force as we see policy adjustment in the Fed?
Absolutely. It's going to be a very important element of the EM stability and growth picture, because not only it's such an important driver of EM growth, currencies, prices of commodities, but that shift from the more export-driven growth to a bit more different structural growth, the reallocation of Chinese capital is definitely going to drag down Chinese growth. So the willingness of Chinese policymakers to stabilize growth in the near term to support smaller or medium enterprises like we saw just this week will be very important for that outlook and for a number of regions specifically, so for Asia, for Latin America, South Africa, so countries that still rely quite a lot on either the direct exports or commodity exports will be very important for them as well.
Phoenix, how much lower actually will Chinese growth be? And, again, do they have all the levers but also the political will to stabilize it, even if at a much lower level?
Yeah, so we're projecting for Chinese growth to decelerate sharply to 4.8% growth next year from the current 7.8% this year. They do have a lot of levers. They do have a lot of scope with which to ease, but I think their priorities around kind of managing the deleveraging process, managing systemic risk, being okay with the trade-off between growth and various reform measures, I think that points toward a situation in which we will see them decelerate relatively sharply. That the risk of the hard landing has increased because it's now kind of spreading beyond the property sector into kind of the real economy, into consumer confidence. So I think we will see more of those risks, and we'll start to see them stepping up with various targeted easing measures.
Magdalena, what happens in Turkey? Is this yet another boom and bust cycle, or is it something deeper that will lead to further readjustment?
Yes, it's yet another turn of that cycle. As we have seen this happening, and it's this lesson that ourselves and the Turkish policymakers are learning yet again. And with each turn of that cycle, we see that the measures that are needed to stabilize it are more difficult. So this time, it's even more difficult because it's amplified by what we just talked about, so the Fed and the repricing of expectations about global rates. So it is even more challenging than what we saw in 2020 at the time of rather easy money. Yeah. Now we are going really against the Fed and against a slightly weaker Chinese growth picture. It is hard to see how the policymakers will come out of this, given the unwillingness to engage in more orthodox policies. But I think in the end, some measures will have to be taken, either orthodox, so rate tightening, more credible policy, or even potentially the risk of non-orthodox measures, which have been employed in the past. The risk of those, I think, is increasing.
Phoenix, what's your take on the Turkish rates curve inversion?
Yeah, so I think the market has started to sense that emergency rate hikes are certainly on the table and likely for us inevitable because the options are quite limited. We've got depleted FX reserves in Turkey. So either we're looking at some form of capital control or we're looking at a series of emergency rate hikes. And I think given the urgency of the situation, we're likely to see those rate hikes materialize. And that's the likely, of course, of action. But we could see some other soft forms of capital controls as well. So I think in responding to this threat, as we see the currency crisis unfold, I think the market will start to price in sharper rates in the short end, and that's likely to lead to a much further curve inversion.
Phoenix, just a follow-up, actually, and I want to thank all of our viewers who write in. I love hearing from you guys. This person's writing in, Phoenix, saying, look, China, going back to China rarely misses a growth target in times of political shuffling. So this person is asking, isn't this a guarantee for more support next year?
Yes, indeed. We do think that China has to step up. We've been calling for them to step up even this year. And we've seen some of those measures materialize in the form of they're starting to ease back on some of the credit conditions. We've seen lots of liquidity measures in the money markets. So we expect to see more, RRR rate cuts, outright policy rate cuts, and targeted stimulus measures across the economy.
Yeah,
they definitely will have to step up.
But they'll have to step up. Do you agree with that?
Yeah, I think that's... Yes, I think there will be definitely some measures to support, given that it's a difficult balancing act to engineer that shift in the economy. And I think we've already seen some signs of that emerging from the authorities.
All right, thank you both for joining us. Phoenix Callan, Global Head of Emerging Market Research at Societe Generale, Magdalena Polen, Principal Economist at PGIM Fixed Income, both joining us, of course, on Turkey and emerging markets. Up next, JP Morgan goes into damage control as the Chief Executive, Jamie Dimon, says he regrets his comments about China's Communist Party. The details next. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, JP Morgan's Jamie Dimon says he regrets his joke that his bank is likely to outlast China's Communist Party. In a statement, Dimon said he was trying to emphasize the strength and longevity of the company. It's the latest in a string of provocative remarks that he's been forced to walk back from. Now, let's bring in Bloomberg's Asian government reporter, Ian Marlowe. He, of course, helped to write some great stories looking at the analysis on how, not only JP Morgan, but other chief executives also deal with China and the possible slapback from the country. So, Ian, where are we? I think it was the first time that also publicly China came out and saying they noted the apology.
Yes, exactly. And I think the words from China's foreign ministry here will be kind of closely looked at by a lot of people who deal with China. I mean, this is, especially for Jamie Dimon's comments touching on such a sensitive sensitive issue, the survival of the Chinese Communist Party, to have the Ministry of Foreign Affairs basically say, you know, we've noticed the sincere reflection by him. We believe this is the right attitude. We hope the media can stop hyping this issue. I mean, this is pretty remarkable given how strongly China has hit out at a bunch of different institutions in the past on everything from Taiwan to Xinjiang cotton to, you know, Korean companies that got involved in boycotts in China after they were involved in missile defense stuff. It's just, it's pretty remarkable to see China actually here kind of walking back and trying to walk down these tensions in the wake of the Xi-Biden meeting the other week.
You know, I mean, I'm going to ask you the most difficult question for probably of the decade. I mean, what's the right way of a chief executive that, you know, speaks freely but that does business in China to deal with China? Because there are certain issues also that you can't, you know, stay away from. So what will the Communist Party in China tolerate?
Yeah, I think that, I mean, that's a crucial question. And I think one of the main things driving comments like Jamie Dimon made the other day is the fact that basically because of China's external aggression on certain issues, you know, whether it's the stuff on Taiwan or the crackdown in Hong Kong or the way they approached, you know, punitive trade tariffs on Australia after their prime minister asked for an investigation into the origins of COVID, the actual public opinion on China in a lot of Western countries has soured to record levels. I mean, the people want to see a little bit of pushback, and that's giving, you know, government, chief executives, you know, the leaders of all sorts of organizations a bit of a new reality to deal with, in the sense where a lot, you know, years ago, no one really wanted, you know, in certain Western societies, especially business lobbies, no one wanted to push China on this stuff because you'd just get kicked out, you'd get banned, you'd get a regulatory investigation. So this is, it's a bit of a new environment where pressure in the West is actually kind of pushing companies to say things like Jamie Dimon says. So it's a very tricky territory for these people to be navigating.
It certainly is. Ian, thank you so much for all of your insight.
On Tyneside for Speech to Business, after a tough few weeks, the PM perhaps keen to turn the page. Now let's turn to one of our other top interviews, and Kai-Fu Lee is a pioneer in the field of AI. Now, in the 80s, he developed a computer program that actually beat the best human player at the strategy game Othello. It was a forerunner of a pivotal moment in artificial intelligence when IBM's Deep Blue beat chess grandmaster Garry Kasparov. Lee has also had a leading career working for U.S. tech companies in China, and he was president of Google China. He now runs a VC firm focused on Chinese tech firms. Now, Lee joined me to discuss the geopolitics of artificial intelligence, as well as the opportunities and the risks that this rapidly developing technology presents.
I think both U.S. and China have tremendous strengths in AI. I think their strengths are actually a bit different. The commercial companies in the commercial areas, I think U.S. tends to be much stronger in enterprise applications like C3 AI and Palantir and companies like that. And China is now showing a lot of progress in robotics, especially for manufacturing and warehouses. And the two countries are both developing great companies in autonomous vehicles, healthcare, and internet. But largely, those companies don't compete against each other due to the current geopolitical tendencies. So I think both countries are, we're seeing tremendous AI companies leveraging the strengths of each country. In the case of US, enterprise software. In the case of China, manufacturing. So I hope AI will end up making companies in both countries winners.
In China, are Chinese companies looking to, you know, have more of an influence domestically rather than internationally, or will that change over time?
I think right now, most of the Chinese AI companies are focused domestically. And should they go abroad, they're more likely to go to countries that have a strong commercial relationship with China and no limitations on technologies. So perhaps the Southeast Asia, Middle East, Africa would be more likely, maybe South America, whereas I think US will tend to have more influence on the traditional areas like English-speaking countries and Europe and Japan. So I think each country will naturally go to the regions where it has some advantage or it has fewer limitations.
Kai-Fu, what does the world look like in 40 years? So, is it going to be like the Terminator, and do you get asked that very often at dinner parties, or what's your vision on where we'll end up?
I think it's two very different possible outcomes. As you know, I wrote the book AI 2041. We try to look 20 years out. You want me to look 40 years out. I do think we have two possible outcomes. There's not a lot of scenarios in the middle. I think either we get our act together and figure out how countries can collaborate and finally realize there are many issues we can work together on, like climate and healthcare, and that in a positive exemplars lead the world and technology problems are overcome. Then we really reach a world of plenitude, where all these technologies will basically eradicate poverty and hunger, and also positive uses will make us live healthier. That's one outcome. The other is that technologies can be misused by people. I don't think technologies will become evil itself and like a Terminator or a dystopia like that, but I do think they provide very powerful weapon to bad people. And terrorists, for example, or countries that choose to use them in a very damaging way to the rest of the world, because I think technology amplifies people's capabilities, and using, take autonomous weapons as an example, it's something that could wipe out lots of people.
It's Innovation Ventures Chief Executive Kai-Fu Lee there speaking to me earlier on, and you can actually catch and watch that full conversation on Leaders with Lacqua, available on Bloomberg.com or here on Bloomberg TV at 9:30 p.m. UK time this evening if you're watching in Europe. Now, up next, Germany passes 100,000 COVID deaths as the latest wave of the pandemic puts hospitals in some hotspots under severe pressure. We'll have the latest as the incoming Chancellor, Olaf Scholz, says he will review possible immunization mandates. This is Bloomberg.
When your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg Bloomberg.com webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Germany's latest COVID surge has taken its toll. Deaths past 100,000 since the start of the pandemic, just as Olaf Scholz prepares to succeed Angela Merkel as Chancellor. Now, for more on all of this, let's get straight to Berlin and our German government bureau chief, Birgit Jennen. Thank you so much, Birgit, for joining us. First of all, how does Olaf Scholz, newly appointed, handle the pandemic? We're in a very difficult juncture for infections and people in hospital.
Well, the problem is that he hasn't been doing much over the past weeks. Merkel has been pushing him in the background, but he has been busy with basically getting the government together. So now we are in this difficult situation, and he has so far said that he wants to set up a crisis management team within the government. But I think we need to look at how quickly they are actually going to get an agreement of the next steps, and because there are different measures in the discussion, a very limited approach of a limited lockdowns in the regions, as well as mandatory vaccination for care workers or for the overall public. But the elephant in the room really is whether there will, at the end of the day, an overall lockdown be necessary.
And Birgit, on that, are the coalition seeing eye to eye, or are there very different factions wanting different things?
Exactly, they are not seeing eye to eye, and this is why they couldn't reach an agreement beforehand. The SPD probably, under Scholz, would also follow the line of Merkel, but we have the Liberals, who in the past and also in the election campaign have taken more of an anti-interventionist approach. They have been sort of critical of far-reaching lockdown measures. And so they were standing, and they are still standing on the brake. They are against lockdown measures and also critical of an overall mandate for a vaccination.
Birgit, thank you so much for joining us today. Birgit Jennen there in Berlin. Now, Bloomberg Surveillance Early Edition continues in the next hour. Of course, we'll have a full roundup of the markets. We're seeing quite supported markets, certainly when it comes to the European markets. We saw a similar move over in Asia, and of course, we're expecting a similar move in U.S. futures. Now, the focus, not so much on the U.S. today, but we do have ECB minutes. Again, it also is Thanksgiving, which means that we'll probably see very thin volumes across the world. The U.S. stocks proving resilient, though, overall yesterday to a slew of economic data and also to those Fed minutes that supported expectations for a quicker removal of stimulus by the Fed. So we'll have a full roundup of all of this shortly. This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力，都有的，但要看 怎么一个截取，说我们不做任何挑衅啊，但是说把它激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
China has, I've spoken with Xi about Taiwan. We agree, we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The question the Fed is now managing is not, do we have an overheating problem? The new problem is, how do you land this economy softly?
We really can't control the stock price. What we can control is our execution.
A lot of us, day after day, new records are being set in terms of the number of infections. The situation is serious.
This is Bloomberg Surveillance, Early Edition.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Thursday, November the 25th. Our top stories today. Taper talk. The latest Fed minutes show officials are open to removing policy support at a faster pace to rein in inflation. Germany's COVID challenge. Incoming Chancellor Olaf Scholz sets out to steer the nation through the pandemic. The EU plans to bolster its travel rules. And damage control at JP Morgan. Boss Jamie Dimon walks back his China comments. Another example, perhaps, of Beijing's power in getting businesses to regulate their speech. Good morning, everybody. It is just gone 10 o'clock. It has just gone 10 o'clock here in London. A warm welcome to the programme. A special edition, if you like, of the Bloomberg Surveillance Early Edition today, because it is Thanksgiving. If you're celebrating Thanksgiving, wherever you are, then we hope you have a good day. In terms of the other markets away from the United States, of course, we are up and trading. The Stoxx 600 in Europe does move to the upside. European futures move to the upside. US futures move to the upside. Of course, we don't have US equity trading today, but we do have futures open, and they all point to the upside of the three major markets, E-minis, Dow, and NASDAQ futures, all modestly to the upside. So we've got Stoxx 600 up by 0.4% here in Europe. It seems that the positivity around the US data picture and a bit of European earnings, all of that is overcoming our fears this morning, this Thanksgiving. We are thankful for the US data, and that is allowing us to put aside our concerns around inflation and the faster taper. Here in Europe, we've had some better earnings actually coming through at the tail end of the earnings season, the likes of Remy Cointreau, that pushing things around a little bit. I put the euro in here as well, but it's broadly a dollar negative story, it seems to be. The dollar down after 4 days of strength, this in the wake of digesting, of course, all that US data and what the Fed might do. We don't have treasury markets open today, so we'll see what happens when they reopen. And I put in here the Hungarian forint, not something we talk about very often, but just it's very zeitgeist to talk about rate hikes, of course, globally. We have the South Koreans hiking rates overnight. We've had the Hungarians increasing interest rates more than expected for the third time in 2 weeks. So that just an underlying illustration of what kind of moves we're seeing in terms of central banks' interest rates and interest rate policy and hikes, as I say, pretty zeitgeist. So we're seeing a surge in the Hungarian forint, and it is taking other emerging markets in Europe with it as well. So that's worth pointing out. Now, let's take a look at the day ahead. Plenty to talk about this morning, and we have a few items on the agenda to keep in mind, despite it being Thanksgiving, of course. The ECB's legal conference on continuity and change begins. The ECB President, Christine Lagarde, due to speak at 1:30 p.m. at UK time. Then at 5 p.m. at UK time, Bank of England Governor Andrew Bailey speaks at Cambridge University. And the EU Competitiveness Council meets in Brussels, with regulation of digital services topping the agenda. Now, the European Union is recommending tightening travel rules. Let's get back to one of our top stories, and that is, of course, here in Europe around COVID. The European Union is then saying it wants to set a 9-month time limit for the validity of vaccinations for coming into the bloc. Let's get to Bloomberg's EU government reporter, John Verlaine, who's with us in Rome. John, good morning. What details do we have on this policy announcement so far?
Good morning, Anna. Well, we're getting the official announcement later today. There's going to be a news conference. And basically, we've seen a document which says that part of the proposals, and just bear in mind, these are proposals, they're recommendations which go to all EU member states. They have yet to be approved. And a caveat, given the patchwork of measures we've seen in dealing with COVID and with travel, there's no guarantee it will all be happily uniform. But basically, the two main news is that there would be a proposal for a 9-month validity for the vaccinations. So that suggests that after those 9 months, people would need boosters. And the other one is that for entry into the bloc, there's a switch of focus. Until now, we've been focusing on countries of origin, the regions, how bad the situation is there. The switch now is to switch to focusing on the people themselves, on whether they're vaccinated or not, given the increase in global vaccination. And the European Commission, the EU's executive arm, says in this document that all this aims to make things smoother, to have more clear rules, and obviously the aim is to try and harmonize what's happening on travel. Bear in mind also that the prioritizing the travel means that access would also be allowed for people with WHO-approved vaccines, but if those vaccines have not been approved by the European authorities, they would also need a PCR. So a new jumble of rules, but generally trying to uniform things.
Trying to uniform things within the EU and for those visiting, and trying to persuade, I suppose, or influence policymaking within European nations, member states. We'll see how far they go along with these suggestions. Thanks to Bloomberg's European government reporter then, John Verlaine, joining us there from Rome. And after 2 months of negotiations, Olaf Scholz has sealed a coalition deal to become the next German chancellor, just as Europe's largest economy faces a surging COVID outbreak. At a press conference to announce the deal between his centre-left Social Democrats, the Greens, and the pro-business Free Democrats, so that is 3 parties coming together, Scholz vowed to position Germany as a climate leader and steer it through the pandemic. Our reporter Christoph Rauwald joins us now from Frankfurt. Christoph, what are the key points then of the agenda that was mapped out by the next German government? What do we know about their policy agenda?
Yeah, good morning, Anna. I think there are actually 2 points that are definitely set the tone yesterday. One, of course, the political move to basically step up the fight against climate or against CO2 emissions, accelerate the energy transition, and cut carbon emissions from Germany's large industrial operations, basically. But the other aspect, which probably has an even bigger urgency, is actually the fight against COVID that you just mentioned. We've seen record numbers here in Germany over the past few days. Last night, we reached the threshold of 100,000 people who unfortunately died related to COVID-19 infections. And the number of new cases is still rising. So yeah, the big question there is like what the new government can really take in terms of concrete measures to bring the numbers down again and put some relief for the hospitals there in place.
And Christoph, we are very used to German coalitions, but we're not used to a sort of trio of parties coming together. So this is a new German experience, and they're coming from very different places, certainly in terms of the Greens and the FDP. What sense do we have, and maybe COVID gives them their first chance to either demonstrate their ability to work together or their ability to fall out. How do we think that the COVID decision-making goes from here? Do they all seem to be on the same page around fighting the virus?
Yeah, that's actually it's going to be very interesting to see, as I think Birgit on the program, my colleague from Berlin mentioned, from a policy perspective, the 3 parties that are involved in the coalition have been pursuing quite different policy approach, basically in the past. The Liberal Democrats have been a bit like more reluctant, basically, to impose stricter measures, whereas the SPD and others have been in favor of those. And what's really essential here is that whatever they do, they can't really afford to take much more time, because I think if we learn one thing during the pandemic, it's basically that the virus can spread very, very quickly. So whatever they agree upon, they need to take action very quickly and come to an agreement that works for all the three parties involved.
Okay, hitting the road running perhaps on this particular agenda item. Plenty of other conversations for later dates around how they manage the economy, of course. Christoph, thanks very much. Bloomberg's Christoph Rauwald joining us there with the latest on the German coalition now formed. Now, JP Morgan's Jamie Dimon says he regrets his joke that his bank is likely to outlast China's Communist Party. In a statement, Dimon said he was trying to emphasize the strength and longevity of the company that he runs. Let's get more with Ian Marlowe, Bloomberg's Asian government reporter. Ian, it's really interesting, isn't it? Jamie Dimon, in his first remarks that were broadcast and that many people heard, of course, he was talking about the long reach of China, and now he seems to have succumbed to the long reach of China in the sense that he's walked back those comments, possibly fearful of repercussions for his China business.
Yeah, exactly. I mean, this is a tightrope that a lot of businesses in China have to walk, and in Hong Kong as well now. And we've seen these comments that came out. They weren't even, he wasn't on a trip to Hong Kong. He had recently done one, but he was speaking in the States, and he had to walk these comments back. The interesting thing here, actually, is that partially because what he was addressing was so sensitive to Beijing, basically talking about whether the Communist Party will continue to survive as a political entity, it looks like China's actually just not wanting to come out and blast him over this. The other day, the foreign ministry just kind of brushed aside questions about Dimon's comment, and today they said they noticed the sincere reflection by him. We believe this is the right attitude, and we hope the media can stop hyping this issue. So, Jamie Dimon probably wants to put this behind him, but because of the sensitivity of the subject that he was addressing, unlike, say, Xinjiang cotton or Taiwan, where Beijing is more likely to kind of come out and just blast whoever was talking about this thing, it looks like Beijing also wants to put these comments behind them and try not to, engage in too much of a back and forth on this, because highlighting those issues in China, foreigners doubting the ability of the Communist Party to survive, that doesn't do Beijing much good.
Yes, I was watching yesterday on the Bloomberg Wires, just expecting some kind of comment from the Chinese government, and it didn't seem to be forthcoming in very prominent channels. So really interesting what you say there, Ian, with regards to what China does and doesn't want to speak out about. And of course, we saw them taking on certain corporates over the cotton issue, but not so much here. Thanks very much to Ian Marlowe, Bloomberg's Asian government reporter. Coming up on the program, the latest Fed minutes show officials were open to removing policy support at a faster pace to rein in inflation. We'll get the thoughts of the markets live team on where that leaves the Fed tightening talk. Plus, the Turkish lira's volatility curve is eerily reminiscent of a similar period in 2018. We'll talk to Venram from the Market Live team about that as well. This is Bloomberg.
Competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about? Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London. Now, London is racing to decarbonise its bus fleet, with the city's mayor promising a zero-emission network by 2034 or sooner. Bloomberg's Mark Daniel Davies spoke with transport bosses and campaigners about the road ahead for European cities.
We're in North London at one of the largest electric bus charging facilities in Europe. Behind me, this zero-emission bus is on its way to COP26 in Glasgow. It's one of thousands that's going to be rolled out in the UK over the next decade, a milestone on the road to net zero. Let's take a look. Fully electric buses like these are set to make up 10% of London's bus network by the end of next year. And the mayor says the entire fleet of 9,000 will be zero-emission by 2034, 3 years earlier than planned.
This is a really big milestone, and it takes away the whole mythology about buses and exhaust fumes once and for all. There's a multitude of things that have to be working together. It needs partnerships with the manufacturers, with local authorities, partnership with governments. They are more expensive than a hybrid or a diesel vehicle, and we need to find ways of making that transition. The biggest transition of all, though, is to get more people on buses. Because once you get more people on buses, the commercial dynamics start working much, much better. One bus will take 75 cars off the road. That starts transforming the environment, transforms cities, transforms how we get about. That's the big key.
With over 2 billion bus journeys in 2019, the switch to an electric fleet is a big step towards carbon-free commuting. And it's just one part of a plan to transform the way millions of Londoners move.
Decarbonisation is about more than just the vehicles themselves. What's just as important is that we encourage more people to leave their car at home and to use sustainable modes. That's really the route to decarbonisation: walking, cycling and public transport. And the more we can encourage people out of their cars, the less congestion will be on the roads. Those that walk and cycling can do so in a more pleasant environment with less pollution and fewer vehicles around them. And those that are on the bus can get to the end of their journey faster and more reliably.
London has been indeed one of the front runners from all European cities in actually making changes towards climate action and also reducing air pollution. The expanded ultra-low emission zone will do even more to clean up the air, to fight climate change and to reduce the overall number of polluting cars, but we need to do even more.
Campaigners are pressuring authorities across Europe to get polluting cars off streets by 2030. And they say major system changes are already underway.
We surveyed over 10,000 European urbanites, including people from London, and the overwhelming majority of people want more space for walking, more space for cycling, more promotion for public transport and better public transport, and also they were crying out for more green space. And I think a full range of solutions is already available. One great example is Brussels. By 2030, there will be no more diesel cars allowed in the city, and by 2035, all petrol and gas cars will be phased out as well. There's also a number of initiatives in Paris. The inner part of the city will become a low traffic zone next year. This will limit the through traffic of about 180,000 cars each day. Copenhagen has also committed to procuring only zero-emission buses from 2025 and to make a very large part of the city zero-emission by 2030. We need to commit to creating zero-emission mobility systems in cities by 2030, and we absolutely need to make sure that this transition is as fair as it possibly can be. There's no time to waste.
The efforts there of some European cities to speed up the decarbonising of their bus fleets, brought to us by the Bloomberg Quick Take team. Let's get back to the markets conversation now. And a day after we saw a deluge of data from the United States and, of course, Fed minutes, resetting some people's expectations around Fed policy. Ven Ram, currency and rate strategist at Bloomberg Markets Live, joins us now on set here in London. Ven, good morning to you. So we had the data, which broadly seemed to lift spirits. We had the minutes, which seemed to give comfort, I suppose, that the Fed is thinking it could bring forward some of its tapering if conditions should warrant that. Where did that leave you in your thinking about what the Fed does from here?
I think that we are on a steeper, faster path towards higher rates. To borrow the Olympic motto, Citius, Altius, Fortius, and I do think that the economy has enough strength to withstand a series of rate hikes from the Fed here. And I think that the market pricing kind of reflects that, because the market was expecting maybe one, maybe two rate hikes by the end of next year before the Fed minutes. Now, and with the Powell's renomination, we see that they've brought it forward for the first hike to June.
Yes, so, and I liked the alliteration of 4 by 24, but now it seems more like 5. The hike expectations, we're seeing more and more of them being priced in. I mean, do we really wait till June, I suppose, is the next question for the first one?
That's a great question, and I do think that maybe we will have to wait for June, because they will need to finish the taper first, and I think that there is enough chorus within the Fed asking for a faster pace of taper, and I do think that they will get through taper first before raising rates, which puts us back in June.
Right, okay, and that puts us back in June, so that's the timing of that. I'm just looking at the Turkish lira this morning and seeing where we are on that, Ven. We've seen, of course, a real weakening of the Turkish lira over recent days, a real emerging market focus for it in terms of the FX story. But then we've seen some moderation of that move. What's the latest here? What are your latest thoughts?
Well, as you said, there's been a moderation, but I don't know if there's the next shoe waiting to drop. Because if you look at the options market, the volatility curve is inverted. Now, that is telling us something very significant. The inversion of the volatility curve suggests that shorter dated options are more expensive than longer dated options, which doesn't happen every day, because the longer you hold an option, the more you will want to pay up. But that's not happening in Turkey, and that suggests that the markets are very jittery about what might come next. The real problem here is the negative real rates, and they are not addressing that. As long as they don't address that, there's going to be a problem. And the gap now is pretty huge at the negative real rate, so they need to do something about it. We saw that play out in 2018 when there was a similar situation, and they resorted to emergency rate hikes of about 500 basis points. And the markets are probably looking for an encore here.
Okay, I mean, inflation running where it is in Turkey. We're not talking about rate hikes for reasons that we've explored many times. Elsewhere, we are talking about rate hikes. We saw the South Korean authorities hiking rates overnight. We saw the Hungarians doing it the third time in 2 weeks. I think it's clearly very much part of a theme. But I know that you've been actually looking into some more sort of dovish commentary coming through from some central bankers around the permanence of quantitative easing, Ven. Where does this come from, and why is it a focus for you?
Well, it's a pretty significant thing. We heard from Holzman of the ECB yesterday saying that, look, we may put the after we exit from PEP in March, we will put it probably in a waiting room, so to speak. I mean, that kind of says that, look, we will deploy those measures if need be at the drop of a hat. And that is very disturbing, because you're basically saying we are going to have permanent QE on tap, so to speak. So basically, you're saying that, look, the markets will be supported forever and ever.
Yes.
So you're stifling price discovery, which is not a great idea.
I suppose anybody who's been in the markets for less than 12 years, though, might have assumed that, because they've always known QE as being a primary tool of monetary policy.
Absolutely. I mean, when Ben Bernanke introduced it, it was something that was very much necessary. But now, at every downturn, we see that central banks, it's become a part of the standard toolkit, whether it's the BOE or ECB or their Fed.
Yeah.
And that's going to set us up for financial bubbles down the road.
That's a different conversation then. Ven, thank you so much. Ven Ram from Bloomberg Markets Live. And for more analysis from the MLive team, NLI Vigo is the function on your terminal. This is Bloomberg.
get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Now let's get to the first word news. I'm Leanne Gerrans. British Prime Minister Boris Johnson has lashed out at France after a deadly boat accident in the English Channel. 27 people died when a boat filled with migrants sunk. Johnson is accusing France of not doing enough to stop migrants trying to get to the UK from northern France. He is under political pressure to stop small boat crossings. Now Singapore is confident it can avoid a Europe-style resurgence of coronavirus infections. The health minister gives the credit to one of the highest vaccination rates in the world and growing natural immunity. About 85% of Singaporeans are now fully vaccinated. I'm Leanne Gerrans. This is Bloomberg.
Thanks very much, Leanne. More next on Germany. This is Bloomberg.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London. Matt Miller and Kaylee Lyons are, of course, enjoying a well-deserved Thanksgiving break. Now, let's turn to German politics. Olaf Scholz said his new German government, which is expected to be sworn in early next month, will do everything to fight the pandemic. He added that the current situation is serious, with some hospital intensive care units already reaching capacity.
Day after day, new records are being set in terms of the number of infections. Even though many of the cases have become much milder as a result of vaccinations, more and more infected people are being admitted to hospitals in some regions. Intensive care units are reaching the limits of their capacity in some places. The situation is serious.
Let's get some analysis now. Katharina Uttermol, Allianz senior European economist, joins us now. Katharina, good to get your perspective. I'll start with the COVID situation, as that is what we heard the Chancellor in waiting, if you like, talking about there. What are your expectations for what kind of measures come forward from the German government, and crucially, what impact that will have on the German economy? You know, when you're doing something for the fourth time or perhaps third, it might not have the same effect as the first time around.
Absolutely. I think for now, really, the key objective is to avoid a national lockdown. I think what we'll see is that increasingly stricter measures will be taken in various states. We already see them, for instance, in Saxon, and I think also Bavaria is moving towards let's say, a lockdown light. However, clearly, the economy, I think, has gotten used to lockdowns to some degree. It's going to hit growth. We're going to go back into hibernation at the turn of 2021-22, and we only expect mini growth for the German economy. But for now, you know, not a wintry setback or even a recession as we had it last year.
Okay, so that's your expectation. That's what you're working into the numbers. Give me your response to the coalition details that we've had so far then, Katharina, because as well as dealing with COVID, of course, this new administration is just coming together really for the first time, not fully appointed, of course, as we know, but there are 3 members of it, and that could pull in very different directions. What's your big unanswered question, I suppose, about how this coalition is going to work?
Yeah, these are definitely, let's say, 3 coalition partners that are sort of uneasy bedfellows that haven't often worked together on a bilateral basis, or now there are even 3 of them in the bed together. So the coalition agreement with 177 pages that we all worked through during last night shows that it is possible to build bridges, it's possible to be pragmatic, but it also shows that this took a lot of compromise. And therefore, for instance, you have a finance minister from the liberal FDP party that is usually in favor of, you know, going back to 60% of debt levels of GDP.
Hello, traders. I'm going to place an order to buy euro. The price I'm looking to buy, 112.20. Okay. Let's see. This is the price I'm looking to buy. 112.20. Let me change line. Just right here. So please place your order to buy the euro. Okay, I'll speak to you later, guys.
Text for now, and let's be clear, it's quite vague at times, is that the government will go back to the debt brake by 2023. So this is, you know, the FDP handwriting, the liberals. But then at the same time, it will also allow federal agencies, but also, for instance, Deutsche Bahn, to raise funds themselves and to invest them. So that will be off balance sheet. That will not be counted towards the debt brake. And then in addition, and that's probably the most important aspect here, is that unspent funds from the 2021 budget, so that's around 60 to 70 billion, will be put into a separate fund to be spent on investments on climate and the transformation of the German economy over the next couple of years. And that will also be excluded from the debt brake. And it remains to be seen if additional funds will also be raised within the 2022 budget. So that could be, for now, what's planned here is 100 billion euros for next year. So this could add up to quite a sizable pot.
Okay, yes, I think it was the same thing, that those funds being excluded from the debt break. I just perhaps worded it badly. Katerina, thank you for explaining it to me. Let me ask you about the environmental policies here, and of course the Green Party, part of this three-way coalition. We have a plan to exit coal by 2030. Germany also has bold nuclear exit ambitions, of course, and that's been a long-standing policy. Is it clear now how Germany makes all of this add up then, Katerina, what the energy mix looks like for Germany into the future?
I would say that among the major economies is probably the most ambitious green transition plan that is out there. But at the same time, if you put these big green targets on your flag, let's say, we also need to be realistic that we're not quite going to make it with the measures that have been announced in the coalition plan. In particular, I think what's worrying is that we will need to see a higher carbon price. And what's currently proposed, a guideline of around 60 euros, and we think is just far too low to really reach the targets. So this is just one example of, it's good to have these ambitions. It is necessary for the German economy to transform, but it remains to be seen if there's not going to be some disappointment at the end.
Okay, where do you think the carbon price should be, Katerina? Where are we heading to?
Yeah, we think it's more likely that it will have to be around 100 euros. So that's quite a bit higher. And we'll also need to think about how to compensate, of course, lower income households, so that there will still be acceptance to protect, to fight climate change here. And this is not, I don't think we're there yet when we look at the coalition agreement.
Just briefly, Katerina, and finally, does the coalition still face any headwinds to fully forming? I know that each of the parties has to go through its own processes to make sure that members are happy with what's being proposed here. Are there difficulties ahead, or is this a done deal?
I think it is a done deal. There could be perhaps some more tweaks here and there. But overall, I think that the individual parties will accept the plan, and so therefore we should have probably by the first week of December, we should have a new government in place with Olaf Scholz being sworn in as the new chancellor.
Katerina, thank you so much. Katerina Uttermol, Allianz Senior European Economist, thank you very much for joining us. Coming up on the programme, Anthony Trenchev, Nexo's co-founder and managing director. We'll talk about crypto, we'll talk about NFTs. He has been buying one, we understand, and we'll ask what the purpose of that is. More on cryptos.
Okay, guys, well done. Position open, 120, 112.20. Okay, you're in. Well done, guys. By the way, happy Thanksgiving for American people, yeah, and probably all the world right now these days celebrating this day. Okay, stay safe. I'll speak to you later, guys.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public because I am the conscience of those folks of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
It's such an interesting
interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think will end up being on the right side of history as well.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, live in London. And now it's been a choppy period for cryptos, with Bitcoin gaining today after the coin lost some 20% since its record high earlier this month. Joining us now is Anthony Trenchev, the co-founder and managing director of Nexo, a London-based crypto lender. Anthony, really nice to speak to you. It is Thanksgiving. How thankful are you for gains in crypto this year? What kind of a year has it been?
Oh, it's been an incredible year, and I'm very thankful for it. You know, the Chinese curse, may you live in interesting times. This year around has yielded some incredible results, and with any success story, some luck always plays a role here.
Okay, so but is the bull market in crypto over, Anthony? And whatever your view, how on earth do you know, on what do you base your thinking around whether we head higher from here?
Right. Well, it's very easy to forget that just in July, we had dipped below $30,000 per Bitcoin. Just 10 days ago, we were at 69,000, which was another all-time high. In regular financial markets, a 20% drop would bring us to bear territory. But in crypto, this is just a rest and consolidation before the other leg up. In terms of why I believe the bull market is going to persevere, is the fundamentals, is the printing machine, is the the characteristics of Bitcoin, scarcity, and it being Go 2.0.
Okay, so it's not a bear market, it's just a rest. That's what we call it when it comes to crypto, Anthony. But you mentioned it there, the printing machine. I mean, it's been much talked about that perhaps the rise in cryptos has been driven by the large amounts of liquidity available in markets these days, courtesy of central banks. I mean, do you think that Bitcoin is vulnerable, or are meme tokens vulnerable? Where is the vulnerability as we see central banks dial back their generosity?
Right. Well, I think that, the risk is being outside in crypto than being in it. And once you're in it, it very much matters what you're actually holding. I would recommend for people who are just starting out to hold some of the blue chips, the equivalent of the blue chips, which would be Bitcoin, Ethereum, some of the more established coins which outperform over the long run. And then if you want to throw into the mix like a tiny portion into meme coins, which have the potential for asymmetric returns in the hundreds, even thousands X of returns, feel free. But, just be mindful that it might crash rather aggressively as well.
Okay, so that would be your recommendation. What about regulation, though? Because in all parts of the crypto universe, Anthony, this must be something that people still acknowledge could come at any time and could be a difficulty. Just yesterday, we saw headlines around India, news that the government there is preparing a bill to regulate crypto. It might allow trading in some areas to promote the underlying technology, but they want to basically prohibit all private crypto, and they want a central banking coin instead. Is this something that you're expecting other jurisdictions to echo?
I don't think that we're going to see a crackdown in crypto as such, like they had in the 1930s in the United States, where they prohibited the ownership of gold. The signs of the wall, to me, are different. The OCC in the United States allowing banks to hold custody, and PayPal coming in, and now the ETF, even though it's based on futures contracts rather than the spot of Bitcoin. But it comes down to crypto being regulated and fit within the frameworks of the existing legislation rather than outright banning it. And, the jurisdictions that go the more aggressive route, I think will ultimately pay the price, because the technology is there, the merits are there, more people are coming in on a regular basis, incredible companies and new virtual realities are being built out, and whoever sticks their head in the ground and remains oblivious to what is happening, will be on the short side of the stick.
Is there a democratic vacuum, though, when it comes to crypto, Anthony? Is this something the crypto universe thinks about at all? Because at least I know that central banks are not maybe as accountable to democratic electorates as many people would want them to be, and that's an ongoing conversation, but they are at least appointed by democratically elected officials in democracies, of course, I'm talking about here. And in the crypto world, there isn't that control. Is that something that crypto enthusiasts think about?
Yeah, certainly. I mean, the beauty of crypto, to me personally, that it is relatively free in the sense that, the market forces get to play out. There is no central entity who has such a hard sway over the markets like, in traditional markets, whereas central banks such as the Fed, the ECB, you have these gargantuan players who determine the direction, and crypto is relatively free, especially compared to that. So the market forces can play out, and I think thus far this adds to the anti-fragility, to borrow from the Sim Taleb, and the resistance. The resilience of the space. Now, in terms of governance, this, as it's grown to almost a $3 trillion industry, that's why we see regulators come in. And our approach and recommendation is let's self-organize and self-regulate so that other outside players don't do it for us.
Right, okay, well, that's interesting if that's what we saw happening in the crypto space. Anthony, I know that, NFTs get a lot of our attention, of course, non-fungible tokens. We talk about them a lot in connection with the art world, and I know that you've been spending your money on one of these, $1.3 million, I think, for 3 cartoon apes at Christie's. You perhaps didn't fancy the Hockneys and the Basquiats that were on show that day. Why purchase an NFT? What does that add to your business?
Right. Well, we purchased it as a company, so it's not my personal purchase. That's important. And, we have big plans for NFTs because we believe the non-fungible tokens are going to be the layering foundation of the metaverse, which is being built out. Last but not least, Facebook's renaming to Meta. And if you think you're outside of metaverse, you can check your screen time on your phone, how much time each day you're spending on your phone. So most people are halfway there. Now, the Bored Apes that we bought, they have a ranking system in terms of scarcity, which creates value in the minds of crypto enthusiasts, and there's an increasing number of them amongst us. And the other thing is, to me, these are the monuments of the world that's being played out. Just last week or 10 days ago, there was the auction for a working version of the Constitution. Who in the 18th century would have believed that this will now auction for $40 million? So this, to me, NFTs are the newer version of the same, of the upcoming Brave New World that is around the corner.
Okay, maybe I'll come see your Christie's purchased NFTs in the metaverse then. Anthony, thank you very much. Anthony Trenchev, Nexo co-founder and managing director. Really good to speak to you today around crypto. Up next, American households are about to eat their costliest Thanksgiving meal ever, if they can even find a turkey. We look at some of the factors driving up dinner prices. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now let's get to the first word news. I'm Leanne Gerrans. The price of oil steady today after OPEC said a coordinated release of reserves may make a crude surplus next year even larger. The cartel and its allies meet next week. Some OPEC delegates warned that releasing strategic reserves may lead the alliance to hold back oil supply in January. Now in Germany, the number of deaths from coronavirus has now gone over 100,000. The country passed the grim milestone at a time when the latest wave of the pandemic has led to a record pace of infections. Battling the virus will dominate the early stages of Germany's new government. In China, tough COVID-0 policies are standing in the way of a full recovery for the shipping industry. In an attempt to keep the virus out, China has continued to block crew changes for foreign sailors, and Chinese crew returning to port face as long as 7 weeks in quarantine. All that has added up to the global supply chain crisis. And a new government review has a warning for English football. It says there will be more financial chaos unless money filters down from the Premier League more evenly to teams in the lower levels. The report says the sport is at a crossroads. Despite the wealth in the Premier League, English football teams have ended up in administration 62 times in the past 3 decades. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Leanne, thank you very much. Leanne Gerrans with your First Word News update. Let me just get to some breaking news across the Bloomberg terminal. We are focused, of course, on any clampdown on technology in China, and the China state-run firms are going to limit the use of Tencent's messaging app. This is according to Dow Jones this morning. China state-run firms citing security concerns. And I mention this because this comes a day after we saw some of our reporting suggesting that China was freezing new Tencent apps and updates for data privacy review. So there does seem to be some further legs to the concerns around technology clampdown in China. Now, it is, of course, Thanksgiving, but the impact of rising inflation on America's turkey dinner might just dampen the mood a little bit. Joining us now on set here in London, Bloomberg's Ed Ludlow, who is looking forward to his own turkey dinner, probably at the weekend.
Yes.
Hope it's not too expensive, Ed. Talk us through the rising price of this Thanksgiving meal.
Right, so nothing quite typifies the kind of global inflation supply chain story like the turkey, because if you think about the dinner table, it's going to be a 14% year-on-year gain for Americans this year across the meal, but the turkey is the centerpiece, 20% to 24% inflation from last year. And it's subject to all kinds of things. It's an industry where they can't get enough workers to process. The supply is limited. Even in the frozen side, you see retailers dipping into frozen inventories because the fresh product's not there. And as has been the case all year long in the food industry, here and in the United States, retailers don't hesitate to pass on those costs to consumers, different from big box, which is happy to see some margin erosion to protect its market share. So it's a really interesting dynamic.
Okay, so we're looking at the Thanksgiving table, gives us a sense of where we've come on the food story this year. Let's bring it a little closer to home then,
Right.
Ed. Talk about European, food supply or just supply constraints generally. Where are we on that story?
Well, that chart you just saw was food price inflation in the United States. The white line and the blue bars were Europe. And in Europe, it's been much more muted. It's interesting. You know, the main driver has been rising cost of fertilizer impacting agriculture. You know, that's largely because of natural gas crunches, because it's, you know, an energy-intensive exercise. I think what's worrying from a Bloomberg economics perspective as well, from the data they've crunched, is that the supply constraints in Europe aren't improving, whereas they are in Europe. You know, Europe is subject to lockdowns, COVID restrictions impact the way people work, the number of hours they can work, the proximity they work to each other. And, you know, the Fed at the same time is also worried about inflation. We got those minutes where they kind of boosted their inflation outlook even before we got the October data print. And, you know, the ECB is thinking about a similar story. The thing is, the ECB has a really worrying COVID case count that policymakers aren't sort of hesitating, and a growing number of which are clamping down. And that's the worry for our food supply chain.
Okay, so the narrative coming through from our colleagues at Bloomberg Economics is that we are seeing some improvement then around the US story, but maybe not here in Europe. So we'll keep an eye on that. Ed, thank you very much. Bloomberg's Ed Ludlow with the latest on supply chain and the impact that some of that supply chain issue and labour shortage has had on the Thanksgiving table. If you are celebrating Thanksgiving wherever you are, then we hope you have a really good day, turkey or not. Let's have a quick look at these markets then. We are, of course, just coming up to 11 o'clock here in London, so a few hours into our European trading session, and we're up by 0.2% on the Stock 600. The FTSE 100 is up 1/8%. The CAC up 0.2, the DAX up 0.2. So we are seeing some moves to the upside across these European equity markets. US futures, for what it's worth, do point to the upside. We'll talk more about these markets when we return. Of course, US equity markets and treasuries closed for Thanksgiving holidays. This is Bloomberg.
An extra $1 trillion in spending not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From London for our audience worldwide, good morning. This is Bloomberg Markets. I'm Anna Edwards. Taper talk. The latest Fed minutes show officials are open to removing policy support at a faster pace to rein in inflation. Germany's COVID challenge. Incoming Chancellor Olaf Scholz sets out to steer the nation through the pandemic. The EU plans to bolster its travel rules. And damage control at JP Morgan. Boss Jamie Dimon walks back his China comments. Another example of Beijing's power in getting businesses to regulate their speech. Good morning, everybody. Welcome to the program. It's just gone 11 o'clock here in London. Of course, it is Thanksgiving, so US equity markets are closed today. US Treasury markets are closed today, so we don't have that kind of direction and we don't have that volume. But if you're celebrating Thanksgiving wherever you are, then we wish you a good day. In terms of where we are on these markets, then we have some reasons for optimism. We have the Stock 600 up by 0.2% here in Europe. We've got a positive story for equity markets. The Asian markets were higher, US futures higher. It seems as if the positivity around US data and maybe a little bit of what we've heard from the Fed is providing some comfort for market, allowing markets to overcome some of their concerns around inflation and maybe the pace of that Fed taper. Let's get to that Fed conversation then. The latest minutes from the FOMC show officials open to removing policy support at a faster pace to keep US inflation in check, even before data showed price pressures accelerating. Joining us now is Sebastian Galli, Senior Macro Strategist at Nordea Asset Management. Really good to speak to you then, Sebastian. Let me ask you about what we heard from the Fed. And there's a sense that the Fed is willing to go faster with the taper. What does that mean to you?
What it means in essence is they're recognizing that this is a narrative. What you have is a contract between the government and the people, which is basically that there's a cost, which is inflation, which is moderate over the long term. And they played around with these rules without the public really understanding it. And what they're realizing is that they lost control. And for that, they have to become more hawkish. This process has been ongoing for weeks and should continue. And they're doing it not because they don't think inflation is eventually transitory. So you've seen some of them become quite nervous about this. And we've seen some evidence that with inventories building up and going in the right direction that the Fed might be right, but because they're losing the contract, the social element of this, that I don't really understand how monetary policy works, but if you're printing a lot of money, it's probably not a good idea when inflation is high, and I don't necessarily believe you as a Fed, you're not so incredibly credible. So they're going through that process. That probably means that they taper faster in the next few weeks. Probably we end up with a March end of taper instead of the expected June. Probably we get rate hikes starting in June, as is currently expected, 3 next year and then 3 the following years and probably 2, and then basically reduction in the balance sheet. So they're doing what they needed to do. They're very far behind the curve and they lost control. And you can see that through cryptocurrencies. The contract is broken and a new type of alternative asset or private money has appeared.
Okay, so that's really interesting. You draw a link then between the rise of cryptocurrencies and the extent to which we've seen support from central banks. Is that because you think money has flown into cryptos because there isn't confidence that the value of fiat currencies will be maintained?
Yes, and it started very early. If you start to look at the beginning of cryptocurrency, it starts in Iran. In Iran, many years ago, there was basically capital controls. People tried to evade it, and the way they did it is through cryptocurrency, and of course, Bitcoin. And then it started again with fear capital controls in Greece. Bitcoins again gained. These were the very early days. You're talking about $100, $200, and it has moved from there on as I believe fear of capital control, fear that money is not exactly what it's supposed to be, is starting to become an issue. You can see that in Europe, you saw that in China, you saw that in the United States. It continued to propagate as different central banks continued to do wild things because they needed to. They were doing the right thing. But cryptocurrencies would have never been allowed 30, 60, or 100 years ago because they actually understood this was a breach of the social contract. And they're allowed now, and is simply an evidence of what the central banks are doing.
Are they allowed now, Sebastian, or are they just authorities haven't taken action to regulate them yet?
Well, they have started to in the United States. They were very early on with the U.S. Treasury stepping in the early days of cryptocurrency to set the rules, for example, in the exchanges that they have to be regulated. We saw the move in China, which of course sees it as a threat to push out cryptocurrencies and stop cryptocurrencies in China. You'll see that in other countries. It probably will appear in Russia and other countries which are more hierarchical in nature, if you can call it this way. In the United States and Europe, it is a private enterprise, and therefore there's nothing to be said about it. It's a question of what people value, what they think is important, and the credibility they assign to the Fed and the ECB. And the people within the crypto space do not assign a large credibility.
Okay, yeah, we've certainly seen efforts, as you say, to clamp down in China, and we were reporting on some in India as well. Perhaps the democratic route might be more around consumer protection or investor protection. We'll see where that ends up. Away from the crypto space then, Sebastian, if cryptos are vulnerable to a rollback of central bank support for markets and assets broadly, then how vulnerable are stocks at these levels?
Well, this is the interesting aspect. When do stocks basically go wrong? It's basically a look at growth, inflation. If growth is going well, and it's going well in the United States, it's going well in Europe, of course, COVID is slightly an issue, so we might get a bit of a slowdown. It's slowing down a lot more than they tell us in China. But broadly speaking, we have a deceleration, and it's going okay. It's a good environment. That's a good environment for stocks. Inflation has been rising, should peak, and should eventually fade. There's too much money pumped around. The entire supply chain, as the economy grew very fast in the recovery from 2020, everything started to break down. In the back of that slowly should come in. Some parts will take longer, such as microchips. You need supply to come in. You need the belief that growth is going to be good for a long time. And this is a great environment for stocks. Yes, but it's a question of level and the valuation. What is painted in terms of future potential growth in the growth and quality stocks is completely impossible. You can't have 20 apples going forward. That's just not going to happen. So we know this is nonsense. We can trade on nonsense. We can be long on nonsense for a significant amount of time. But I think by the end of 2020, reality is going to sit in with it and hit the growth and hit the quality side very hard. And that'll offer huge opportunity, a lot of dispersion. Why? Because a lot of the mechanisms, such as climate, such as innovations, are going to become even more important in the coming decades, because we're going to be in an environment of relatively low growth, relatively high inflation, and that means innovation has to be strong.
Okay, there may be value in the nonsense then, Sebastian, as you suggest, if everyone believes in it. I want to ask you about something you say in your notes ahead of our conversation here today. You said by the year end 2022, equity markets should go through the eye of the needle. What do you mean there? Do you suggest we'll be through all the base effects or through the supply chain disruptions and back to a sort of quote-unquote more normal environment? Or what are you expecting to see by that point?
I think the reality is going to come in. She's a fair lady. She's very nice. She's very understanding. At one point, she does come with a baseball bat, and she comes and hurts us. And we live in a fairy tale, and that fairy tale eventually will reach its end. But that is not for the entire market. That is part of the market. And the question is what happened afterwards, because everybody's been waiting for that for years on end, and it's never happened. Well, it does eventually happen. And it's a very painful environment. That is also a huge opportunity, because many people will be waiting for that moment to buy on the cheap things which are related to development of new technologies, AIs, Apple. It could be also anything linked to climate, because we know that this needs to increase very strongly. And for people who are in the business of looking at balance sheets and knowing what they own, it has been a frustrating time, because people just buy things on themes and without necessarily understanding what they completely buy. And this is when you're going to see the value of portfolio managers being able to pick within credit, within high yield, within equities, and making the right decisions, not for an investment in the next 6 months, but 5, 10, 15 years down the road. So an enormous opportunity. One should be aware we are living in a daydream. Some of it is completely fictitious, and eventually reality will set in.
And what time, I'm not sure I like your baseball analogy, Sebastian, but what time horizon do you think normality is going to set in, to use your words?
Well, it's a function of liquidity. So we know that that rush of liquidity has pushed everything going forward, made people euphoric about long term. We know that a company like Apple can innovate, can become better. It's just better managed to do things better than everybody else. They will step into new markets. They will develop new things, and they will push out in mature sectors and obsolete sectors and companies that will simply push them out and develop and become better. On the other side, regulation will come in and hurt them very badly, and that should increase in the coming years, particularly coming from the Democrats. But it's also the fact that there are not so many apples, and we know that there can be so many apples in the world. There are pears, there are bananas, and there are things which are deeply unedible, and we're going to recognize that basically going forward. So it's an interesting mix, because if you own Apple and you know Apple is going to hit the wall, do you still want to sell it? And the answer is probably not if you're a patient investor.
Okay, not all stocks are as edible as Apple, then some are inedible. Sebastian, thank you very much for joining us. Good to see you today. Sebastian Galli of Nordea Asset Management. Just a breaking news line I want to bring to your attention. Goldman Sachs now sees Fed hiking rates in June, September and December. So they see 3 hikes next year if we add all of those together. And in terms of broad market expectations, we have, of course, seen hike expectations being brought forward, and that has continued in the wake of those minutes of last night. It was nice to say 4 by 24, but now it seems it's more like 5 by 2024. So we will watch as that one develops, and we'll watch how Treasury markets react. Of course, futures open, but the actual cash trading in Treasuries closed today because it is Thanksgiving. Now, this Thanksgiving, let's get a first word news update. For that, here's Laura Wright.
Thanks, Anna. British Prime Minister Boris Johnson has lashed out at France after a deadly boat accident in the English Channel. 27 people died when a boat filled with migrants sank. Johnson accused France of not doing enough to stop migrants trying to get to the UK from northern France. More than 25,000 people arrived in the UK this year, about 3 times as many in 2020. The European Union is coming out with updated proposals on travel. The EU will recommend a 9-month time limit from the validity of COVID vaccinations for travel into the bloc. That suggests booster shots will be needed. It also will propose that vaccinated travellers get priority. EU governments are pushing for the bloc to smooth out differences in rules to help safeguard the ability to travel. The price of oil steadied today after OPEC said a coordinated release of reserves may make crude surplus next year even larger. The cartel and its allies meet next week. Some OPEC delegates warned that releasing strategic reserves may lead the alliance to hold back oil supply in January. The first female prime minister in Sweden couldn't have gotten a worse start to her tenure. Magdalena Andersson was forced to resign just hours after her historic appointment. The problem, a junior partner to Andersson's Social Democrats left the government after losing a budget vote. Andersson had to step down in order to get another chance. There could be a new vote as soon as tomorrow. A new government review has a warning for English soccer. It says there will be more financial chaos unless money filters down from the Premier League even more evenly to teams in the lower levels. The report says the sport is at a crossroads. Despite the wealth in the Premier League, English soccer teams have ended up in administration 62 times in the past 3 decades. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Thanks very much, Laura. Now let's take a look at your day ahead. Of course, it is Thanksgiving, and that might be dominating much of the activity stateside. Of course, markets closed there. But in terms of the rest of the world, let's tell you a little bit about what's going on. The ECB's legal conference on continuity and change begins with ECB President Christine Lagarde due to speak at 1:30 p.m. UK time. At 5 p.m. UK time, Bank of England Governor Andrew Bailey speaks at Cambridge University. Of course, a lot of focus on the December meeting from the Bank of England. And the EU Competitiveness Council meets in Brussels with regulation of digital services topping the agenda. Quick check on the markets then. We have the Stock 600 up by 0.2%. The Asian equity session finished up by a similar margin. US futures also point to the upside. They're not open, of course. Cash trading is not open today in the United States because it is Thanksgiving, but we will have, of course, this futures market still giving us some sense of direction, and it does point to the upside. In terms of other market moves, we've got the euro at 112.21, a little bit of movement to the upside there, but it is really a dollar negative story. We've seen a bit of hiking of interest rates taking place from certain central banks in emerging markets through the Asia session as well. I'm thinking of Korea and of Hungary. So that's taking some of the focus for FX trade this morning. And we have the oil price fairly flat. Coming up, we'll talk UK-France relations. They're swapping accusations over who is to blame for the death of at least 27 migrants in the Channel yesterday. We'll get the latest next. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Where's the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is Bloomberg Markets. I'm Anna Edwards. Welcome back to the program. Now, Chinese electric car makers like NIO and XPeng are gaining an edge with local drivers by tailoring their cars to domestic needs. They're increasingly allowing Chinese consumers to live their digital lives at home and on the road. And for some, that means in-car karaoke, apparently. Bloomberg's John Liu puts it to the test.
I love you, baby. Falling in love. Now said by me.
Maybe that's enough. China is the world's most important car market today. Every year, there are some 25 million cars sold here, far more than any other market in the world. Big global brands like Volkswagen, like BMW, like GM have had great success here. But at the same time, it's become increasingly clear that in some significant ways, they are starting to fall behind some of the local competition. One facet that really stands out is the connected car.
除了说刚才听到 QQ 音乐呢，还会有喜马拉雅呀，包括正常的电台等等这些东西。
You have a cohort of up-and-coming Chinese companies that are increasingly allowing Chinese consumers to live their digital lives at home and on the road. That means in the car, they can have their social media, they can have their gaming, and they can have things like karaoke.
Darling, darling, stand by me.
It's not your usual road trip. It's big business for companies like XPeng, NIO, and Li Auto, who are at the forefront of this trend, besting Western rivals by offering models with karaoke microphones. So Stella from Li Auto is just showing us some of the functionality in the car. What I do is I take my phone out, and there's a QR code here in the car. Scan the QR code, and it takes you directly to your own social media account. So we're here at XPeng. We're in the XPeng P7. So the XPeng car by default, the entertainment functions, so the karaoke, the gaming, the movies, are not able to work when you're driving. So they're by default turned off when you're driving. But after the car has been purchased, the owner can change the settings so that passengers can enjoy the functions. For many Chinese drivers, the car is more than just a way to get from A to B. It's also a place, when parked, where they can enjoy time with friends for a bit of karaoke or even a picnic. Electric car makers in China are competing on what happens inside the cabin. from social media integration to voice recognition software.
Hi, Nomi.
我来啦。
帮我们放首歌。
正在播放的是日文的。
A car's digital technology is particularly key to luring China's consumers. As you're shopping for a car, how important are these functions, be it WeChat, be it karaoke, these digital functions in your decision of what car to buy?
性价比吧，还是比较重要的，因为在生活中它更便宜，就是使用起来的费用比较低啊，或者什么的，还是比较重要的。然后还有就是它的一些现在的一些科技吧，比较科技感比较强的，或者是一些辅助作用比较好用的一些比较好一点吧。
Electric vehicle sales have surged in China. They're forecast to more than double to 3 million units this year from 1.37 million in 2020. Darling, so it goes. Some things are meant to be.
Very brave John Liu there, Bloomberg's John Liu on innovation in China's electric vehicle market. A family karaoke car session sounds both wonderful and awful all at the same time. Let us leave that story there for now and get back to the markets. So European equity markets are open, of course. It's Thanksgiving, so stateside we have no trading for today. We have no treasuries, cash market open. We don't have any equity markets open, but we do here in Europe. And the Stoxx 600 is up by 1/8% or so. The FTSE pretty much on a par with that. The DAX lags a little bit. But when you look at the sector breakdown, it's utilities that are the biggest gaining sector, if that gives us a sense of just how much risk appetite or not we're seeing here for European equity markets. The oil price fairly flat right now, 82.25, a little bit higher than it was at the time we saw those strategic reserve releases. We have heard a little bit overnight, actually, from OPEC and what it made of that announcement from consumer countries. Let's get an update for you now on a really tragic story here in Europe. Britain and France have swapped accusations over who is to blame for the deaths of at least 27 migrants. This is after their boat capsized in the Channel yesterday. The two sides are already at a sensitive time in their post-Brexit relationship. Let's get more then from a government perspective. Sami Adgirni joins us now, our reporter, government reporter based in Paris. Sami, good to speak to you. So the UK has accused France of not doing enough to stop the migrants. We've really reached a bit of a low point here when it comes to the relationship between the UK and France, perhaps. What's the French response to this?
Well, it's interesting to note that the French initial reaction was relatively soft. President Macron and his Interior Minister, Gérald Darmanin, initially blamed human traffickers for the tragedy. And then the French tone became much harsher, with Macron urging Boris Johnson to stop using this crisis for, quote, political purposes, and Minister Darmanin saying that what he called the UK's loose labour market makes it an attractive destination for migrants. And now it's important to understand that this is all happening at a sensitive moment for President Macron. He's already under pressure to solve a spat with the UK over fishing rights. This is a big issue here, and it's making French fishermen furious. And then there's also a presidential campaign slowly warming up. The election is in April, and Macron will probably seek a second term in a very, very competitive race.
Yes, I've seen these interesting suggestions from France about the labour market in the United Kingdom and making a suggestion that if there were more of a requirement to carry cards, that perhaps that would change things a little bit. I've heard UK cabinet ministers pushing back against that, of course, as maybe we'd expect them to do from the right of centre. What is France planning to do here then, Sami? What's the next step?
Well, France has called for an immediate reinforcement of Frontex. Frontex is the European Union's border force. Macron has also requested an emergency meeting of the EU ministers in charge of migration issues. Again, Macron is under pressure to show that he's in charge and he's handling the situation in the best possible way. But the overall challenge for Macron here is to show that he can be both tough on immigration and sympathetic to human suffering.
Is there any sense that the two countries could work together at this time? I mean, tensions already pre-existed, of course, Sami, as you've mentioned, because of Brexit. Any sense that the countries could work together to try and find some sort of solution for this cross-channel challenge?
Well, that's hard to predict, but as a matter of fact, the relation between the two countries is in a terrible situation. We can notice that leaders from both countries have been talking to each other. Macron's been talking with Boris Johnson. Minister Darmanin is talking with Mrs. Patel today, but still, some sort of magical solution, magical outcome, some unexpected chemistry is difficult to imagine at this point.
Sami, thank you very much. Sami Adguirni joining us there, our government reporter in Paris. And I should just note that the French President, Emmanuel Macron, is just speaking at a press conference. No comment on this as yet, but we will monitor for any comments he might have on what was really a tragedy in the Channel yesterday. Coming up on this programme, Christian Schulz, Citi's Deputy Chief European Economist. We'll talk to him about the ongoing fight against COVID across Europe and what that is doing to the prospects for the Eurozone economy as we head into the depths of winter. This is Bloomberg. Front, when your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
From London, for our audience worldwide, good morning. This is Bloomberg Markets. I'm Anna Edwards. Now, after nearly 2 months of negotiations, Olaf Scholz has sealed a coalition deal to become the next German Chancellor, just as Europe's largest economy faces a surging COVID outbreak. At a press conference to announce the deal between his centre-left Social Democrats, the Greens, and the pro-business Free Democrats, that's 3 parties coming together, Scholz vowed to position Germany as a climate leader and steer it through the pandemic. Our reporter Patrick Donoghue joins us from Berlin. Patrick, we've had a little bit of time to digest some of the details, such as it is, that's come through from this trio of parties that's going to make up the coalition. What are hopes like that these 3 parties can work together?
Well, Germany has a very stable political system, and all the differences that these 3 parties had, and they had a lot since Election Day and before Election Day, have been hashed out over the past 2 months. And so I would expect them to govern for 4 years for sure, because, if you look at the Green Party, that got a lot of what it demanded in terms of a fairly ambitious climate agenda. If you look at the Free Democrats, they got the finance ministry. They've also got a commitment not to raise taxes. A lot of the key items in both parties, and all 3 parties' agenda are in there. So I think you will probably have tension, but Olaf Scholz, as Chancellor, should be able to sail through.
And what about the debt break, Patrick? You mentioned how the Liberals got the finance ministry, and there's some interesting novel thinking about how to get around the debt break or change the definition of it, I suppose. Take us through what we need to know there.
Yeah, well, a lot of the political discussion on the debt break, the constitutional limits set on debt in Germany, has revolved around how to get around it. I mean, a lot of the discussion, especially the language in the coalition agreement, is about the flexibility of the debt break. When the FDP came and demanded that the debt break not be loosened or removed constitutionally in Germany, giving that was a way of conceding the point, but at the same time, it's not calling for example, the CDU-style black zero, strict budget discipline. The FDP wants that, but they didn't make it a demand. If you step back and make the demand, these constitutional debt break, constitutional debt restrictions with all of their flexibility, that's a way to offer some flexibility on financing.
Okay, thanks so much, Patrick. Good to get your views. Patrick Donoghue joining us there with the latest from Berlin. Let's stick with this theme. Christian Schulz, Citi Deputy Chief Economist, European economist, joins us now. Christian, let me start where I left off there in that last conversation around the debt break and what we've learned here, because I want to talk to you about COVID. I want to talk to you about the German economy, the 3 parties coming together more broadly, and then about the ECB. But just specifically around this question, because going into the elections, this was something that the markets thought about quite a lot, and certainly investors talked about quite a lot. So what do you make of the way that they've managed to get this through?
Well, this is a coalition of 3 parties where 2 of them are very closely aligned in their demands, especially on macro policy, the Greens and the SPD, and 1 completely sticks out, that's the FDP. And if you look at the coalition agreement, the smallest party, I think got their way on most of the macro issues, including on the debt break. The debt break, as Patrick mentioned, stays. There is some talk about circumventing it or loosening it in the agreement, but given that the FDP got the finance ministry, and will be the guardian of the debt break, if you like, I think there are very close limits to the kind of creativity that you may see in circumventing it going forward.
Okay, so we shouldn't make too much of the creativity being talked about or the ways around it then. What are your expectations more broadly in Germany then, Christian, around this 3-way coalition, this traffic light trio? They do represent different parts of the political spectrum. I know Germany has a long history of coalitions and compromise on that front, but this is 3 parties. How do you think this positions us politically within Germany?
Well, that trio already exists in Germany at the state level in various countries and has for a long time. And if you look at the performance of that kind of government at the state level, it is a centrist, steady kind of government, usually stable, not deviating very much from, say, grand coalition type of arrangements. I think on the macro front, we've already talked about the debt brake. I think the one big thing that they've agreed is this big increase in the minimum wage by 20%, probably already next year. That's in the current context of high inflation rates and the ECB, which we're going to talk about, is something very interesting. But otherwise, I think on the macro front, there's really not that much to write home about. Where it's interesting is on the micro front, getting planning permissions done quicker, getting the government digitalized, the whole green issue and how to get businesses involved in that. That's, I think, where interesting things could happen. But of course, where it's going to be very difficult to actually, enforce what they've agreed and, compromise on every little step along the way.
Yes, and we heard Olaf Scholz talking a lot about investment and how this was going to be, he wanted to open up a period of investments in the German economy on a number of fronts. But the GDP numbers this morning, my colleagues writing those up, saying that they are hamstrung by an investment slump. What is going to make the difference in the German investment story, do you think, from here?
That is a very good question, because the agreement itself doesn't really say very much how exactly they're going to promote investment. Of course, there's the whole green agenda, which they hope will promote investment, and they're going to make it easier to invest for companies. And there's even this super depreciation for companies, which potentially, at least for the next couple of years, are going to reduce their tax burden if they invest. So there are some incentives. But with the whole green transition, of course, you have to keep in mind that what they're doing here is they're, substituting the supply, say, of energy production that we have at the moment with a new kind of energy production, but they're not actually increasing the supply side of the economy here. So it's just one for the other, while demand in the meantime is going to stay the same, and that is going to mean more inflation. That's going to mean higher price on top of course, the increases in CO2 prices and everything that we're going to see. So from a macro front, again, this is a government which is not going to change much at the aggregate level, but there could be some real challenges for markets, including for central banks here.
It's interesting what you said. So taking this conversation more European then, more pan-Eurozone, Christian, it's interesting what you said there about the higher minimum wage in Germany, and clearly that's going to be a focus for anybody watching inflation. Is that going to be echoed in other parts of Europe? You can imagine politically that narrative will go down pretty well post-pandemic.
Well, hopefully, you'd have to say, also from an ECB's perspective, because what we're faced with at the moment is, of course, a big shock, negative shock to households' purchasing power from these high energy prices. And if some of that could be compensated by higher wages, that would be a short-term fix. And of course, in the longer run, it would hopefully lead to a more stable inflation environment and an end of these constant downside surprises that we've had over the last 10 years. In a good scenario, it even drags along productivity growth and the sort of ex post justifies these wage increases. Of course, some people will say it creates the risk of de-anchoring inflation expectations and therefore makes forces the ECB to increase interest rates. But I think I see right now the positive in these wage increases.
Okay, and more broadly around the ECB, around expectations there. I note in your notes ahead of our conversation, Christian, you talk about how the deposit rate might not change for 2 years, might remain at this level through 22, through 23. Is that justified given how we're now seeing a number of banks bringing forward expectations around the Fed to 3 hikes next year?
I think we differ on consensus on this question when interest rates rise. We take the guidance that the ECB adopted in July seriously, and we don't think that the 3 conditions for rate hikes will be fulfilled for quite some time. At least, 2024 is probably the earliest we see a first rate hike. But importantly, that's not to say that the Governing Council won't act. But the action will be on the balance sheet side, will be on the asset purchases in particular. We can see in the speeches, with perhaps the exception of Fabio Panetta yesterday, that they're moving away from, they're relegating asset purchases as a tool. So what we expect is that what they're going to decide in December is effectively going to mean that asset purchases will be phased out over the next year and end at the end of next year. But that then there will be a long pause until they can actually hike interest rates because their guidance will be fulfilled. I think the big risk is that they change the guidance, because you see all these hawkish central bankers coming out and say, well, we shouldn't lock ourselves in. We shouldn't pay too much attention to these forecasts. We also have to look at inflation expectations, which so far, of course, aren't in the guidance at all.
What did you make of the comments we heard? I think it was Governing Council member Robert Holtzman throwing a curveball in perhaps a little bit yesterday, talking about the quantitative easing program, and some of my colleagues have interpreted his comments as suggesting we're heading towards permanent quantitative easing, that even